So as far as the first question goes, I think your guess is as good as mine. The only thing I can say with any conviction or confidence is that to date, we've been hearing about this antitrust stuff for these stocks for years and years and years, and to date, it has not really impacted the performance of these stocks. It may at some point, the market's discounting organism and knows more than I do. I'll let the market answer that question. As far as the kind of second observation that you make, Francine, and again, I look at this from what is the message of the charts every day, and what we have found so remarkable is just the persistent strength in consumer discretionary. So I know that there's big parts of the economy that are still locked down or underwhelmed here, but when you look at the strength in things across all segments of consumer discretionary, it gives me some confidence that the market is comfortable with the path forward the economy is on, and ultimately, as a chart watcher, that's what I care most about.
Okay, how do you look at the healthcare charts?
Yeah, I think getting better. Biotech in particular, I would encourage the viewers and listeners to actually look down the cap scale here. You've started to see small cap biotech really reassert itself. Small cap biotech, one of the first small cap sectors to already go and make a new high above their August, September highs. I think big picture, you take a look at some of the big pharma stocks like a Pfizer, for example, really good response to Pfizer off support at the end of last week. I think that is reasserting itself as a leader. The life science names have been excellent. So again, this speaks to the idea, if you're throwing darts at the market right now, good chance you're going to get a leader. The participation has really broadened out.
Chris, I just got to say thank you so much. Greatly appreciated today. Chris Verone was strategist there, and some really important technical concepts. We like to do that every once in a while. Futures up 26 with our first heard news in New York City. Here's Ritika Gupta.
Thanks, Tom. Trading in stock and derivatives is set to resume on Euronext markets after its biggest outage in 2 years. Trading was halted a little more than 2 hours ago. Officials blame a technical issue and have been working to fix it. House Speaker Nancy Pelosi has given the White House a deadline. If there's no more progress on a proposed stimulus package by tomorrow, it won't get done before the election. And it's not just the House and the administration that are involved. Senate Republicans are balking at the size of the package. Still, President Trump says he's confident he could persuade the senators to back a good deal. A ceasefire between Armenia and Azerbaijan has fallen apart just hours after taking effect. It's the second truce brokered by Russia this month that failed to stop the violence. Hundreds of people have been killed in the 3 weeks since fighting broke out over a disputed region. And OPEC and its allies meet today over its plan to ease output cuts. The pandemic is again threatening oil demand, and the cartel's own internal reports point to the risk of a new surplus. In private, delegates say they're open to delaying an increase in production. Global News 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thanks so much. Lots coming up. We've got Chair Yellen joining us in the 8 o'clock hour. Tomorrow, I believe David Weston in conversation with the Speaker of the House. We're going to clear the political air with a tilt to the Republicans. John Sitilides will join us with Trilogy Advisors. Always interesting on the future of the Republican Party. Stay with us. This is Bloomberg.
for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
For Biden, he will surrender your jobs to China. He will surrender your future to the virus. He's going to lock down. This guy wants to lock down. He'll listen to the scientists. If I listened totally to the scientists, we would right now have a country that would be in a massive depression. Instead of, we're like a rocket ship. Take a look at the numbers.
And experts have said, and have been saying for the last month and a half, that nearly another 200,000 lives are likely to be lost in the coming months between now and the first of the year. If we continue to refuse to follow science, because he refused to embracing wearing a mask. How many times on television see make fun of Biden wearing a mask?
I love the Republicans, and we have some great, but they have to learn to stick together better. You know, we have some stupid people.
Folks, I mean it when I say this. It's time to restore America's soul. It's time to rebuild the backbone of America, the middle class, and this time bring everybody along, no matter your race, your age, your religion, your gender, ethnicity, or disability. We can do this.
The interesting discussions of the weekend, and on we go 15 days to the election. Right now, John Sitalides joins us. He's with Trilogy, which describes a little bit about his public service to the Republican Party and particularly to the government, working, of course, with the Department of State over the years. John, thrilled to have you with us. Greg Valliere moments ago said Donald Trump still has a chance. That goes completely against the zeitgeist of the weekend. John, have we been here before? Is this like Vujade?
2016 redux, Tom. We need to be very careful here because the national polls to date have been largely meaningless in terms of how to actually win the Electoral College. And what you see now is the race tightening, as we all expected it would. And the next 2 weeks will be very, very determinant in terms of the 8 or so battleground states. And Biden has had this general lead in the national polls with registered voters and with likely voters. But what it really comes down to is, can he hold that lead in the last 2 weeks? To date, this election has been about persuasion of voters. But I think what you'll see the next 2 weeks, it'll increasingly be focused on motivation of voters.
Yeah.
And I think the Trump rallies demonstrate where exactly that strategy will be playing out on the Trump side for the next 15 days.
Where is the silent majority of 2020? Is it in the suburbs? Is it a certain demographic? It was written about over the weekend eloquently by the mainstream media. They're out there somewhere and they're ready to vote. Where are they and who are they going to vote for?
Well, they're throughout the country, mostly rural and suburban. Increasingly, we see larger numbers potentially of younger blacks and black men who are thinking about voting for Trump. Also an increase in the Latino vote for Donald Trump compared to 2016. He is faltering slightly with suburban women and also with senior citizens. And I think one of the weaknesses in the Trump strategy is they've talked about replacing Obamacare, but they haven't laid out a definitive replacement plan. And I think that makes a number of people, especially seniors, very nervous. But the silent majority is out there. It's silent, Tom, and I think that's what's confounding pollsters. And I think it's why the Biden campaign manager was very smart this past weekend to tell their supporters, this thing is going to get tighter and tighter. Do not get complacent. If Biden voters think that a 10-point lead in the national polls from June and July and August means victory in November, they're terribly mistaken.
But John, why is the majority silent? So is this a shy Trump voter, or does Trump regain them in the next two weeks? Like, what's the dynamic there?
The ones that I talk to tell me that essentially they have been, well, there's been an attempt to shame them into silence. They're socially marginalized. They're ostracized, right? You can't walk down a city street in a major metropolis wearing a MAGA hat or you'll be punched in the face. So they feel like they've been marginalized and isolated by larger society, by the institutions, but among their clusters of friends, the motivation is extraordinarily powerful. And I don't think Trump has lost a single voter from 2016. So he's got to hold on to that base. I don't know that he'll be adding many voters to that base, but I think the issue is, can Biden hold on to his lead, or can Trump persuade a number of voters to not vote for Biden, especially with the Hunter Biden email scandal? I think that's going to be a centerpiece of the Trump strategy for the next 2 weeks.
John, let's go to Florida. I mean, the political expert Francine Lacroix nailing the 50 states focused on Georgia is one example of a very, very close race. How do these two candidates pick up the critical, call it a broader minority vote of blacks and particularly of Latinos? What's the actual method to do that?
Well, in a state like Florida, we would look at two Latino groups, right? There's no large Latino blob, and I think we need to be careful about this. The Latino community is made up of a number of sort of distinct mini communities, and we have the Cuban Americans who tend to vote very Republican, and they're very motivated to vote for Trump, especially because he reversed Obama's outreach to Cuba when he became president. And also there's a very large Puerto Rican vote in Florida. And by Donald Trump investing in Puerto Rico, especially as a place to reshore very sensitive medical supply chains after we learned about China's dominance of that industry, that's coming to Puerto Rico. And so the governor of Puerto Rico has now endorsed Donald Trump. Two very important motivational factors for subgroups in Florida's Latino community.
John, can President Trump actually be reelected without the support of suburban women?
It all depends on what the percentage is. I mean, it's not as if there's a 100% rejection of Trump, but he is weak there. He was weak in 2016, and a lot of this is centered around suburban women finding his character rather repellent. The question is, I think he's going to come back and say, do you want your cities and your suburbs to look like Portland, to look like Seattle, to look like the gang-laden areas in Chicago every weekend where you have a number of people being shot and killed? Or do you want law and order? Do you want safety for your families and for your communities? And I think that's going to be the message Trump sends out.
Yeah, but we're 2 weeks to the election, so that's the message that he's done so far, and yet they're focusing on health care and still don't want to vote for Trump. So does he just have enough time to reverse that?
Well, I guess we'll see on election day. I mean, this is when a number of people actually begin to focus. There's still about 12 to 15% of undecided persuadables in the electorate. How many of those are in the battleground states will be a key to the Trump and Biden strategies of the next 2 weeks. But don't look at us. We've been focusing on this for the last year and a half. A large number of Americans will only be deciding in the next 15 days, and that's who Trump and Biden have to appeal to.
John, very quickly, how many you think are undecided? What did you just say?
12 to 15% of the electorate is believed to be undecided. Yeah. We don't know how many of those are in the battleground states, though.
Yeah, 12 to 15. That's a huge number that I have not heard before. John Silitilis is there, a geopolitical strategist at Trilogy Advisors, diplomacy consultant to the Department of State under contract. Now, up next, we track COVID-19 with Joshua Sharfstein, Johns Hopkins Bloomberg School of Public Health Vice Dean. That's coming up shortly, and this is Bloomberg.
women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
When everything around us, including the way we work and live, has been interrupted, uninterrupted service is peace of mind. Kimmy from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
This is Bloomberg Surveillance. I'm Rishka Gupta with your Bloomberg Business Flash. Alibaba is taking control of China's largest chain of hypermarts. It's spending about $3.6 billion to double its stake in Sun Art Retail Group. That will give Alibaba a 72% in the grocery company. Groceries have become the fastest growing online segment. Shares of SoftBank climbed to a 20-year high. Investors are rallying behind founder Masayoshi Son's more cautious strategy of selling assets, cutting lists, and buying back stock. In the past, Son has been known for his extravagant spending on acquisitions and investments, but he changed course after the pandemic outbreak and management missteps. And another sign how the pandemic has upended the economy. Job vacancies in London's finance industry slumped 54% in the third quarter compared with a year ago. That's according to recruitment firm Morgan McKinley. And that's the Bloomberg Business Flash. Tom, Francine.
Vertica, thanks so much. As we continue to track the virus, Bloomberg has developed a unique partnership with the leading authority on COVID-19, and Johns Hopkins has been at the forefront of the international response. Every day, we'll bring you insight from experts in public health, infectious disease, and emergency preparedness. Well, today we're joined by Dr. Joshua Sharfstein. He's Johns Hopkins Vice Dean for Public Health Practice at the Bloomberg School of Public Health. Dr. Sharfstein, thank you for joining us. When you look at, the election in the U.S., we're 15 days away from that. How much on the focus is still on healthcare, or have most people actually, decided on whether they will vote for Trump on healthcare or not?
States, there are just so many cases now in the Midwest and critical battleground states in Wisconsin and Michigan. The numbers are surging. So I think it's on everyone's mind whether they're connecting it to the election or not. And healthcare is important because the Trump administration is in court trying to undo the Affordable Care Act, which supports the healthcare of millions of Americans. So it's really been front of mind for many voters.
Dr. Sharfstein, if somebody comes up to you and says, you know what, I'm fed up with the lockdowns, I'm fed up with the restrictions, and it does seem that there's, restriction fatigue, not only in the U.S., but across the world, what are the figures and numbers that you remind them of?
Well, first of all, I point out that there really, at least in the United States, aren't lockdowns at the moment. People are not recommending lockdowns. They're recommending reasonable steps and vigilance and, not pretending that the virus isn't here. And I remind them that 215,000 people have already died in the United States, and it is not hard at all to imagine another 215,000 and then another 215,000 dying if we decide that we're just going to let everybody get the virus, which seems to be some people's strategy, but really is a strategy of giving up.
What do we know about the Pfizer vaccine? It seems that they actually would be ready to, start for an application in November. November is a couple of weeks, away. Are they the first ones to get it right?
Well, we have no idea because they haven't reported the studies yet. I think what they're saying is that they will have the first read of the studies with including data on safety sometime in November. And I certainly hope that it's positive, that it looks good, and that the FDA will look at it carefully, convene an advisory committee, and then we'll all be able to look at the data. And if that happens, I think we'll at least have one vaccine, which is great. And then there'll be other studies that'll read out, and we'll have a chance to get more.
How do you, convince citizens that we're not doing this too fast, that it's, the track record of safety that will dictate the timeline?
Well, I think the Food and Drug Administration has a very important role to play, as do all political leaders, in saying, well, the study is done, let's take it one step at a time, and, in short order, convene independent experts, release a bunch of the data, allow people to look at it, and give, a little bit of room for people to really take a look and say, wow, this really works, and it has a very strong safety record. And if people do that, I think the medical profession will feel confident, many people will feel confident, and it'll be the science driving the discussion rather than people hopping up and down, and just pointing and saying, just take the vaccine. That's what we don't want.
Why are we seeing so many new cases in the US and Europe? Is it a second wave, or is it seasonal, or is it because some of the restrictions were relaxed, too soon or by too much?
Is there an all of the above option? I mean, I think all of those things are contributing. Clearly there's pandemic fatigue. Clearly there were some restrictions were relaxed quickly. And I just think in general, the weather is probably not helping because it's driving people indoors. And that's why we're going to get a wave. That is exactly what's happening now. And the question is, how big a wave are we going to get? And can we get control of it? And that is really going to depend on leadership. And it's going to depend on people's ability to really, go back to the basics of what kept us under control.
Joshua Sharfstein of Johns Hopkins, thank you so much for joining us today. Now, we have, of course, many stories we're looking at today. The story, of course, on Euronext, it was halted because of a technical difficulty. We understand that everything, derivatives and stocks, actually reopened. The other story is the U.S. election. We'll track the polls. And then we look at Brexit. If I'm looking at pound, which I'm looking at the terminal right now, pound is jumping by the most since August. This is Bloomberg.
When opportunity knocks at the door, don't say, blimey, I've still got my pajamas on. Say yes to stuff and it will take you into interesting places.
We're clearly going through some very unusual times and, enormous difficulties getting groups of people to agree on things.
From Bloomberg's European headquarters in the City of London, join us on Leaders with Lacqua.
The V-shaped recovery path looks very much secure.
We've seen huge holes blown in global economies, and now we're trying to patch them up.
Half the economy is going to have come back, the other half will not have come back and can't come back.
We're realizing the world is not a perfect place, and we're in this for the long haul.
Once we get stimulus, once we get a vaccine, the action is going to move very quickly.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
From New York and London, for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance Live on Bloomberg TV and radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Farrow. 15 days to go until the election. Equity futures up 31. We advanced 0.9%. Let's deal with the elephant in the room. Mookie Betts getting it done for the LA Dodgers. And Spursy being Spursy. How'd you like that up front?
We're
30
like
seconds into the show.
0-0,
Bang.
: 29. You just, folks, for those of you worldwide, this is Pharaoh at his worst. This is the cruelest. We're going to move on to what matters here. But to bring Mr. Betts into the conversation this early, we say good morning on Bloomberg Radio 106.1 Boston, Newburyport, the Red Sox, worst in the American League. And we move on from there. John, 15 days until the Dodgers or the Tampa Bays take the World Series. 15 days until the election. I asked Marty. I asked this seriously of Marty Schenker earlier. Is there going to be a debate Thursday night? I mean, is that still up in the air?
We understand there will be a debate Thursday night, but given this election so far, Tom Keene, who knows? And isn't that the problem for this market? You know, my question coming into this week, Tom, is basically how much of the medium-term outlook hinges on what happens in the next 2 weeks. How many of our market participants that come on this program actually believe that?
You know, we got two people talking melt up. Ben Laidler is talking melt up at Tower Hudson here with futures up 31. John will do the data here in a moment. But Chris Verone, I'm sorry, John, I never have heard Mr. Verone as bullish as he was in the last hour. He's looking at the number of stocks above their 200-day moving average and other smoke and mirrors to really give him a bullish cast. And you wonder if it's the markets expecting out into next year.
He was thinking Japan. He was thinking Sweden.
Yeah, very international
on us.
Yeah.
We will do that again throughout this program. Through the week I did. I just had a little dabble in Bloomberg Surveillance a little bit earlier this morning.
Well, you know.
Plenty of happy talk this morning, Lisa, from Tom, the Fed,
Happy
Chris
talk.
Verone.
You brought up Mookie Betts. She doesn't know who Mookie Betts is.
Happy talk? Well, you know, let's find out whether the Fed's Jerome Powell is so happy. He's going to be speaking in about an hour time. He's participating in an IMF panel. The focus of his discussion is digital currencies and cross-border payments. Of course, people looking for any guidance he may give in terms of whether the Fed could ease again or what the parameters are for them to do so. 8:30 a.m., piling on, the central bank speak. ECB's Christine Lagarde is speaking at an ECB conference talking about pairing science of being a central banker with the practice of it. People also looking for further easing measures that could come from the ECB. And today, Treasury Secretary Steven Mnuchin is visiting the Middle East. No one cares. What people care about is that he is not in Washington, D.C., despite the fact that Nancy Pelosi has a new deadline of Tuesday to get some sort of agreement on a new fiscal support deal in order to get something done before the election. Markets are moving on this, John. They won't stop. If it's a good headline, they'll move. If it's a bad headline, they'll move. And this story just gets played on repeat over and over again. And here we are. Happy Monday.
So long as they're talking, I guess that is bullish. Lisa Abramowitz, thank you very much. Here's the Wikipedia entry. Marcus Lynn Mookie Betts, born October 7th, 92. You missed his birthday, Tom.
Kind of a weekend
An American
did you have?
professional baseball right fielder for the LA Dodgers. He previously played for the Boston Red Sox. No
Really?
idea what happened there. No idea at all.
Yeah, well, you know, it's that kind of weekend. I mean, since Pharaoh's trashing on me, obviously you had a bad weekend, John, but it wasn't worse than me. I'm watching the Tots, and I had to go out with afterthought and, you know, begin Christmas shopping. I come back, and folks, even I, you know, I'm learning this from Pharaoh. Lisa, I didn't know beans about English football until I ran into young Pharaoh. And the bottom line is, John, it's a 90-minute game, and I guess, like, the Tots mailed it in about minute 81, because minute 82, minute 85. John, what in God's name is 90 plus 4? For those of you on radio, this is like the times of the West Hams.
Meant to end in the 90th minute. They added 4 minutes on, Tom, and then they scored in that final 4th minute of stoppage time with just this beautiful strike.
Did you
from
see how he
outside the
kicks from
area.
farther out? John, they've got to kick the ball more.
I knew you
from
might bring that
farther
up.
out.
I know. That is
Lisa,
really,
do you
really
want to
good
chime in
analysis,
here?
Tom.
Not really. Nope.
Thank you.
Lisa can't wait.
Lisa's smarter
Lisa
than we
can't
are.
wait. I know what Lisa's thinking. Let's get to the price section, so let's do that.
Yeah, let's
I'll
do
run
that.
through the equity market for you. Squeezing out a third week of gains on the S&P 500 last week, just about. Equity futures this morning, Lisa said it. They're talking, more talking. Apparently that's a reason to be bullish. We're up 0.9% on the S&P 500. In the FX market, euro firmer, no idea why. Euro dollar 117.68. Weaker dollar story in the mix. We could talk about the data out of China. That recovery in the second largest economy is really, really impressive, Tom.
And what you do is compare and contrast. It's really important to take that 4-point-X statistic, folks, and compare it to the negative statistics you're seeing in so much of the rest of the world. On a relative basis, John, it was important. And look what renminbi does, down to 6.68.
A recognized recovery in China, momentum in the United States, a lost cause maybe in Europe at the moment. That's the topic of debate through the week. No, them too, and the Red Sox.
You're
and all
just
the other teams that
what
you
did
support.
you do this weekend? I mean, I had a great weekend.
I was just thinking, yesterday evening after watching that game, I just thought, what can I do at 7 Eastern when I open that show? The markets, stimulus talks.
There's an
or just
election,
Mookie
John.
Betts.
There's a
There's
debate.
an election 15 days away. There
It's
is.
like
Tina
Janet
Shah
Yellen
joins
at
us
the
now.
8 o'clock hour. You know, there's like things we're
Looking
doing
forward
here.
to that.
And you're talking tots.
I know. I'm not in that conversation.
It's my first
so
question
I
to
thought I'd
Chair
bring
Yellen.
other things into it.
How about those
What's that?
tots?
Oh, she'll love that. Seema Shah joins us now, Principal Global Investors, Chief Strategist. Seema, welcome to the Goat Rodeo. I'm sure that's what other people think this is at the moment. Seema, it's fantastic to see you. First question to you. I asked it at the top of the hour. How much hinges on the next 2 weeks as you put together your 2021 calls?
Not that much. You know, we see this time. Sorry, I'm discussing at the moment. Yeah, we see this time and time again. You know, if you look at all the election years through time, and actually, you know, the volatility tends to ebb away. The returns typically move with fundamentals. So at the end of all of this, once you've passed through the noise, the markets just go back to what really drives them, which, as we've seen this year, is going to be the pandemic, and it's going to be central banks and a little bit of fiscal stimulus, if we can see that. But those are the key drivers. It's not really going to be what happens in the next 2 weeks or even the next 3 or 4 weeks, however long it takes.
Seema, we've been doing a lot on equity. Tell me what's tradable in fixed income. Where is a quote-unquote opportunity in yield?
Yeah, it's a tough question at the moment. You know, we have still liked investment grade, but of course we have been reducing some of our allocation they've given that you're not getting too much. We actually like preferred securities. You get a bit of a pickup. It's still relatively safe area, so there are some opportunities there. And of course, within high yield, you have to be in the better part of that spectrum because, you know, the economic recovery is slow, it's protracted. There are a lot of potholes ahead, and it's going to be those riskier companies that you're going to see that playing out in. So, of course, you have to be careful.
When we look at equities, the story really has been, do you buy into the rotation trade, the cyclical story, rather than just big tech? Where do you stand on that?
So we have maintained a pretty significant positioning to big tech through all of this. We still really like that sector. There's, you know, so much to be said that as long as you've got the ongoing pandemic, the continued concentration of working from home and reliance on technology, it still plays out. Even the macro environment, you know, if you've got economic backdrop, which is a little bit risky like it is right now, then investors just need companies with strong balance sheets, positive cash flow, you're getting that from big tech. And then, of course, with the low bond yield environment where we know that central banks are not moving anytime soon, I think everything plays out well. Now, having said that, there are hurdles ahead. We have to think about regulation. We have to think about the fact that they have to meet really, really high earnings expectations. Now, through all of that, I don't want to say we haven't got any exposure to cyclicals, because I think this is the time to start thinking about adding a bit more exposure, because if we're looking at a continued recovery, then cyclicals should do better next year.
Seaman, a recovery where? Seaman, as you look at things right now, momentum in the United States, Tom and I were just talking about that, a really good recovery it looks like emerging in China, and just nothing of the sort in Europe. Where do you want that cyclical exposure?
So a little bit in the US. I mean, look, I agree that, Europe is it's a perennial disappointment. Every time we think it can come through, something else comes along. And certainly right now, it's not an area which is looking particularly attractive. You said it, emerging Asia, anything which has got any kind of close relationship with China, and even the new sectors of technology there, really should do well. So that's where I think that cyclical exposure can come from. And of course, from a kind of a large cap, small cap, I think there is an opportunity here to raise your exposure to small caps.
Seema Shah of Principal Global Investors. Seema, thank you. Great to catch up with you this morning. Head of a key week as we count you down to a general election 15 days away. Equity futures with a bid up 30 on the S&P 500. We advanced 0.9%. We have a steeper curve in the mix as well. Yields up 3 basis points on 10s, up 4 basis points, Tom, on a 30-year yield this morning.
Notice that 30-year bond out to 1.57%. This really bears watching into Tuesday, Wednesday. Not so much today. Maybe we break out with NASDAQ 100 up a solid percent or so. But what's interesting, John, do we do this and go back and forth like we've been going, or can we actually put on 1, 2, 3 days of this kind of excellence in a row? That jury is out.
Well, Lisa, does the happy talk in D.C. actually turn into some real policy making? Because that's been absent the last several months.
I just wonder how many times can we get a head fake? It's like Lucy and the football in Charlie. This is like a cartoon. We've seen this story again and again and again, and yet nothing has gotten done. Why would anything get done now? There's still a lot of distance between both sides, including both sides of the Republican Party. I don't know. I'm just flummoxed. Who trades on these headlines, John?
Well, that's the point, Lisa. There's 3 sides to this right now. The administration, House Democrats, and then Senate leadership. And Leader McConnell, Tom, the president and Secretary Mnuchin are bringing up this idea that they can lead on Leader McConnell to get this through the Senate.
No evidence.
If they get a deal in and around $2 trillion. I haven't seen it either.
I read carefully the Bloomberg sum on this. I thought it was really quite good this morning. And, you got to wait to get down a number of paragraphs before the senator from Kentucky shows up. Lisa, I just had a frightening idea. I wonder if John knows who Lucy is. And the fact that Charlie Brown looked a little bit like me. And John,
I never even thought of that.
Clue.
I know the cartoon.
Gold.
I never. I've got that. I can think of the cartoon.
Got that. Got that.
Have I told you about my friend Mookie?
Oh,
good friend of mine.
What kind of
coming up?
This must have started in a bar in Mayfair. I mean, this tone started
coming
in
up
Mayfair
a little bit
on
later.
Friday.
Well, the bars are shutting, aren't they? So maybe that's the frustration. Futures up 30. We're up 0.9%. This is Bloomberg.
With the First Word News, I'm Rishika Gupta. House Speaker Nancy Pelosi has set a deadline if President Trump wants a pre-election stimulus plan. She says there has to be more progress with the White House on a deal by tomorrow. The president has said he's willing to go higher than the $1.8 trillion his team has been trying to offer Pelosi, but Senate Republicans may not go along with something that large. In China, economic recovery from the pandemic continued in the third quarter. GDP rose 4.9% from a year ago. That's less than expected, but higher than the second quarter number. Meanwhile, China's retail sales grew 3.3% in September, and industrial production was up almost 7%. The number of coronavirus cases around the world has now hit 40 million. Infections have been picking up in Europe and the US Midwest. It took 6 months to reach the first 10 million cases. The last 10 million were added in just 32 days. The US, India and Brazil account for more than half the cases. And Bloomberg's learned that British officials are prepared to water down Prime Minister Boris Johnson's controversial law-breaking Brexit legislation. That's a move that could revive failing talks with the European Union. Johnson's internal market bill rewrites parts of the Brexit deal he struck with the EU last year. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Is it your expectation to do this another 5, 10, 15 years?
It's like Whole Foods is my daughter, and I literally married my daughter off to the richest man in the world. I just kind of came along to make sure the marriage settled in well.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
We're saying to them, we have to freeze the design on some of these things. Are we going with it or not? And what is the language? I'm optimistic.
It's a market long on optimism. House Speaker Nancy Pelosi speaking on ABC this week. Tomorrow, 12:30 Eastern, speaking on Bloomberg TV and radio with David Weston. A conversation you do not want to miss. 2 hours and 12 minutes away from the opening bell. Here's the price action this Monday morning. Squeezing out a third week of gains on the S&P 500. And we add some weight to it this morning. Up 28, we advance 0.8%. In the bond market, yields up. Treasuries down, curve steeper, 0.78% almost on a 10-year yield. Euro dollar, euro advancing 117.67 overnight. GDP might have disappointed to the downside relative to estimates in China, but the data elsewhere encouraging economic data out of China. Moving from the data to the politics, the president hitting the campaign trail. Arizona today, Pennsylvania tomorrow, Tom, North Carolina on Wednesday, and then on Thursday, a debate with Joe Biden.
Yeah, it's going to be interesting to see the debate come off. Let's get right to it. There's so much to talk about. Kevin Cirilli joining us, John and Lisa, Chief Washington Correspondent. We welcome all of you on Bloomberg Radio and Bloomberg Television as well. Kevin, I was sleepless in Tottenham this weekend. They got crushed by West Ham. They looked like the New York Jets in the back half of the game. And Kevin, I went through and looked at all the different polls led by Survey Monkey. You got to be kidding me. Do the polls have any veracity right now to pros like you?
Yes. Look, there's CBS Battleground State polls that just came out over the weekend that show a President Trump within the margin of error in states like Michigan and Wisconsin. Now, from a strategic standpoint, to look inside of the President Trump's reelection campaign and to look at some of the campaign stops that he has made in recent days, including Georgia. For critics of the president's administration, they would argue that these are spots and states that he has really should have had shored up at this point in the race. However, that goes against the reporting that I'm hearing, which is that he is going to these conservative areas to run up the margins in conservative districts in order to remind rural voters that they better show up and vote on November 3rd. Because the only way that President Trump gets reelected is if deeply conservative districts amplify their turnout and they have a wider margin of victory against Democrats. Fine. That's the path.
Kevin,
that's the president's path.
Is there any evidence that those deeply conservative districts of people that made this guy win 4 years ago, are they voting by mail? Are they voting by carrier pigeon, or is it going to be traditional? They're going to show up in the line at 10 a.m.?
The latter. And based upon the mail-in ballot polling that has come out in terms of where the breakdown lies for mail-in ballots, Republicans are more likely to vote in line at polls and to show up on Election Day, and Democrats are more likely to cast a ballot and mail in ahead of time. And that's why, quite frankly, the media networks and whatnot are bracing for a long type of several days following the November 3rd elections in terms of the count.
What I hear from you, Kevin, is the president doubling down on the existing strategy. No changes with 2 weeks to go. Would that be right?
And no changes from 4 years ago. That's absolutely correct. And to be frank with you, there's this hunkered down sense of mentality that often exists in businesses when businesses, for example, are facing scrutiny on Capitol Hill from lawmakers. This is a president's reelection campaign that feels that they've been there before, that they've had their backs up against the wall before, and that they're ready to bulldoze through. In contrast with that, they also recognize that this week's presidential debate is incredibly important. I was struck by seeing a line that the president added to his campaign speeches over the weekend, which was he's now positioning himself as a donor underdog and using the same line of attack that he drew against Hillary Clinton in 2016, which is that he's arguing that he will not be beholden to donors, in contrast to Democratic presidential nominee Joe Biden. I would note the Biden campaign making very strategic inroads in suburbs and trying to urge the same type of turnout, trying to dangle that political carrot, so to speak, to suburban Republican voters who, again, might not mail in a ballot, but he wants to drive them out in the suburbs to run up those margins. It's a fascinating two opposite strategies. I can't stress that enough.
In the meantime, there's a question about Republican unity, especially as another round of fiscal support talks continues. Senator John Cornyn of Texas comparing President Trump to entering a relationship with a spouse, trying to change them and failing. How big is the divide right now between Republicans? Yes, really.
Yeah, look, I think it's a massive divide, and based upon my reporting, what I can tell you is that Speaker Pelosi is calling for there to be some type of deal within the next 24 hours in terms of a vote. The Democrats in the House still pushing for $2.2 trillion. President Trump has said he wants something bigger than that, and Leader McConnell still around the $500 billion. Go ahead, Tom.
I'm lost here. Is Speaker Pelosi Vice President Biden's friend on this stimulus debate? Or if they do a deal, isn't it like a major win for the president?
Yes, but and will be no doubt spun as such. It would also be a win for many of those rank and file Democrats who the speaker wants to see the majority.
Fair.
So you can play it all different types of sides and without question. So yeah.
Okay, Lisa, you lost
Kevin,
my train of
thank you.
thought there. What? Changing the spouse? What was that about the good senator from Texas?
I'm not
I knew
taking
that
the
would
bait.
get you. So John,
I'm not taking the bait.
I will take the bait. John Cornyn of Texas came out and said the relationships with Trump are like women who get married and think they're going to change their spouse and don't.
No way.
Fail to. Basically, yes.
I'm shocked. Oh my God.
This doesn't ring true to you, Tom?
Oh, okay.
We can go there.
You want to go there, Lisa? Go on. I'll leave
Please
you guys
don't.
to it.
Well, Tom, does this
Lisa was
resonate
asking
with you?
Tom whether you've got any experience in
Daily.
this, Tom, that you'd like to share
Daily.
live on air.
No,
Women trying to change you.
Okay, just taking a step back, the reason why I brought this up, I will save
please-
both of
please
you.
take a large
I will
step
take a
back.
very
Well
big
done.
step back. The idea here being that there is this confidence in Mitch McConnell. Yes, I'm going to plow my way through this. Mitch McConnell can get some sort of stimulus agreement passed, and yet there is a huge divide that seems to be widening as President Trump and, frankly, Republican senators lag behind in the polls, and this is going to make it difficult for Pelosi to get something through, and frankly, for President Trump to get
Well,
There's
precisely.
about a minute left. You've got a bit more rope if you want it.
You can use it to hang
No,
yourself.
don't fancy it, Lisa. Don't want it.
I'm out. Go ahead. You can talk about relationships now.
I'm going to thank Kevin Cirilli, Bloomberg Chief Washington
Thank you,
correspondent. No one wants my thoughts on that right now. Alongside Tom Keene and Lisa Browitz, I'm Jonathan Ferro. I'm going to count you down to the opening bell.
Please
It's about 2
save
hours and
me.
5 minutes away. Here's your price action.
I'm not trying to change you,
Shaping up
John.
as follows. I'm not going to change. It's not going to happen. Equity futures up 28, up 0.8% in the FX market. Euro dollar up 0.4%, 117.67. PMIs at the back end of the week for the United States and Europe as well. Europe's
John,
looking really tough
can you
right
wear
now.
different socks? Can you, John? Can you do a different? I don't like those
Could
socks
you wear,
you've
could you
got,
wear a
John.
thicker tie?
Can
Could
you
you wear a thicker tie?
Yeah, can you wear a thicker tie? No, you can't wear no tie and change the damn socks.
Oh, Lord.
We
It's
don't
gonna
want
be
to
a
change
long
the
week.
From New York and London,
polka dots.
this is Bloomberg.
Everything around us, including the way we work and live, has been interrupted. Uninterrupted service is peace of mind. Juzi from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
It is the morning of Monday, October 19th, 2 weeks tomorrow, an election in the United States of America. From London and New York this morning, good morning. Alongside Tom Keane and Lisa Abramowitz, I'm Jonathan Ferro. 2 hours away from the opening bell, equity futures drifting higher. More happy talk around a fiscal stimulus deal. No idea if we actually get a deal. Tom says yes. Lisa's laughing. Equities up 28. We advance 0.8%. In foreign exchange, euro dollar 117.68. Mentioned it briefly. PMI's back end of the week. Key data point for the continent. Just what kind of shape were we in before the extra restrictions went on in the month of October? And in the bond market, yields higher, actually, by 3 basis points. Curve steeper. Your yield on a 10-year, 0.7756%. On the bond market, Ashok Bhatia of Neuberger Berman.
The Fed has a lot of credibility and a lot of tools. And, you know, the market is reluctant to take interest rates or government bond yields to significantly higher levels.
That's the take of Ashok. Here's the take of Mike Schumacher, Wells Fargo Securities senior macro strategist, writing the following. Treasury yields and US dollar continue to be buffeted by stimulus headlines. We expect this fixation to end in the next few days, please. With virtually all attention back on the US elections, the please part, Tom, was mine, but I imagine Mike shares it.
Well, yeah, the next few days is really part of it. Mr. Schumacher, of course, a legend at UBS, and we're thrilled that he's macro strategist now for the Wells Fargo Bank, and we're thrilled he could join us this morning. Michael, along that line is a macro strategist looking at the timeline of an election. I believe, Michael, elections end. Then what?
That is what I'm looking forward to, Tom. Can't wait for us to talk about something besides stimulus and the election. But look, I mean, our big concern is the result to be delayed a bit. You've got a couple of states that don't start counting until the night of November 3rd, as wacky as that seems, with mail-in ballots. So we're worried that this will extend a week or maybe two beyond November 3rd. So sets the stage for a lot of market volatility. As far as stimulus goes, that just seems laughable.
Very importantly, in your research note, Michael, you do what we've talked about. We've talked to other people in the syndicate as well. I think of John Norman at JP Morgan as well, which is how you link equities into the foreign exchange market. Are equities leading or are they following?
I would generally say equities lead FX a bit. It seems that FX takes its cue, but the bigger point is they react to the same issues. So if there's an overall risk-on theme, let's say driven by these strange stimulus talks, it's going to lift equities and probably make the U.S. dollar take a hit.
Mike, are you looking at two different baskets here against the dollar, Asia, EM, and then Europe? Because there's two very different economic stories playing out at the moment.
Yeah, Europe's a tough one, Jonathan. I certainly agree that you've got to separate in particular, the British situation versus the EU. That's a huge event, very European-centric, obviously. So I think you're right that it's important to try to separate Asia, EM, and perhaps LATAM as well.
We could talk about that a little bit later, Mike. Tom would love to maybe do that now, Mike, but let's avoid it for now. Front page of the FT today, the prospect of a double-dip recession in Europe. Do you think that's possible, Mike?
Double dip, conceivably, a lot of things would have to go wrong. You've got to think about the central bank policy response. It's been overwhelming. The central banks are all in. So we think that virtually any hints of weakness are going to come in with additional accommodative moves. Now, the challenge in Europe always, frankly, is that you've got so many countries trying to get together on really agreeing what time it is. They have a very difficult time spending money. So the fiscal response potential in Europe is limited, whereas in the U.S. it's still pretty big.
You said central banks are all in, Mike, and certainly we saw even the Fed's balance sheet increase the most in several months last week, even though markets are doing just fine. What's the threshold for them to come in with more firepower, and what is that firepower?
Yeah, Lisa, we get this question quite a bit. People say, well, is there a speed limit on the Fed's balance sheet? And from our perspective at Wells Fargo, we'd say no. I mean, the Fed has already ramped it up by an enormous amount. What's an extra couple trillion? Does anyone really understand what the Fed balance sheet is anyway? Probably not most people. So is the Fed really going to get a lot of heat if it takes that number up substantially? We doubt it. So really the key question to focus on here is how much of a rate increase on the back end could the Fed tolerate? And we think if it's for the right reasons, let's say the COVID situation improves or there's a vaccine right around the corner or something like that, the Fed might be perfectly content to see the 10-year Treasury yield go up to 1%-ish in a matter of a month or two. That probably wouldn't phase it a lot. So it would have to be something we think more dramatic and for a more pernicious reason than simply having improving COVID.
I love that. What's an extra couple of trillion? That's basically the quote of 2020. Mike, I do wonder, which asset class do you think is being bolstered the most by the Fed's ongoing intervention and, frankly, central banks around the world?
Well, here's a good factoid for you, Lisa. We're sitting here on October 19th, and the 10-year Treasury yields at 78 basis points. So it closed on March 23rd at 79 basis points. That's the low close on the S&P that day. So since then, bonds have done zero, at least Treasuries, and equities have gone on fire. So it seems to us it's pretty clear. It's equities and moving right down the risk curve. Equities, high yield, you can work your way down to investment grade, but the riskier the better. Those are the assets that have benefited.
Michael, this is your wheelhouse. Does the underpinning economics and global finance lead out to certain instability at some point, or are there so-called glide paths that get us to a successful conclusion out there?
Yeah, I think it's interesting, Tom. You consider the ratio of debt to GDP in a lot of major countries like the U.S., and certainly it's gone up dramatically this year. Is that a source of instability? Well, it could be, maybe down the road. The question is, do funding rates stay really low? And more importantly, does economic growth pick up? We saw decent numbers out of China overnight.
Yeah.
And if we see a pretty reasonable recovery, let's say in the U.S. and Europe over the next 12 months, it probably sets the stage for that instability to diminish. But if the economies bump along at a very grim rate, then I think you're right. It could be an unstable situation.
Yeah, but which are you modeling? Come on, are you modeling a grim rate or are you modeling half full? I mean, you know, on this show, we get opinions each and every way.
We think the recovery is going to be decent. And really, it's predicated on having some sort of vaccine available, let's say, in the first quarter or two that's widely distributed. And if that happens, you ought to see growth pick up quite a bit.
Yeah.
So we're definitely not in the Grim Reaper camp.
John, to me, in the middle of October here, I know we're distracted by the small event November 3rd, but to me, this is the arch call of every single house. Just simply, what's the economy going to do to be an underpinning for the Fed to allow for all this liquidity to lift assets higher?
Well, don't you think the difference between $2 trillion stimulus from a fiscal side, Tom, can make a difference? That's why I think the next couple of weeks are really, really important. What's the composition of Congress look like? What does the fiscal impulse look like down in Washington? That's the U.S. recovery. Mike, you're optimistic, constructive on Europe through 21, recovering as well. We had services PMI flirting with negative territory coming into the extra restrictions. Mike, that was a loss of momentum before even things started to shut down again. Where does the optimism come from on Europe, Mike?
Yeah, the optimism comes from, John, because we think this notion of ongoing lockdowns, restrictions, et cetera, is going to disappear pretty quickly, assuming there's a vaccine available in the next quarter or two, maybe 3 at the most. So if you get a widespread vaccination by, say, June 30th of next year, economic growth ought to pick up dramatically, and people think about lockdowns as ancient history. So at that point, we should see pretty good growth. So we're really hinging our call on that, really that issue right now coming true.
So given the fact that we've gotten record numbers of cases in Italy and France, that they are talking about further lockdowns, what would you have to see with respect to the path of the virus to change your Europe call?
For us to get much more pessimistic, we'd have to see the notion that vaccinations are available soon disappear, or at least be pushed off substantially into the future. So for instance, if a number of the leading companies who are working on vaccines say, oh, we've got trouble with this trial. A number of people got sick. We have to postpone by not just days or weeks, but months. That's the sort of thing that would make us a lot more pessimistic.
Michael, in the markets, where do the financial sectors fit in? I mean, truly on a global basis, the European banks with hugely depressed book value ratios, and even in the United States, I don't want you to comment directly on Wells Fargo, of course, that's inappropriate. But on the financial system, how does the stock ownership of big banks fold into all this?
Yeah, Tom, I think the major issue for the financial system in general and for banking is you've got to be able to pick up some spread somewhere somehow. And as far as it seems obvious, but risk assets have performed so well right now, it's difficult to do that in credit. You could do it in mortgages potentially, but as far as plain vanilla government bonds, there's just not much there. So in terms of banks making more money with the, let's say, less credit sensitive products, probably need a steeper yield curve for that to work out.
Mike Schumacher, great to catch up, sir. Always good to see you. Mike Schumacher there, Wells Fargo Securities Head of Macro Strategy. This has got to be the problem for Europe, Tom, that goes back a solid decade now. The majority of loans comes through the banking system in Europe. That's a huge difference between the United States, where so much is done in markets. And the banks are struggling. The banks have been struggling with negative interest rates as well. And what really phases me in Europe, and we're starting to get a taste of this in the UK as well, where does the optimism, the enthusiasm come from for negative interest rates outside of the FX channel? I don't get it.
No,
I don't see it. And I think many people share that view.
Yes, many people share that view, and pushing against that are economists who buy the model. But, John, this is critically important and goes back to the wonderful and late Marvin Goodfriend. You've got to have the courage to do magnitude or amplitude of negative interest rates, and we've never done that within this supposed experiment.
What do investors do the moment they see negative rates, Tom? They sell the currency and they shred bank equity. They run.
Yeah. They run.
It's not an encouraging sign, is it?
I mean, the clear up, I sound like Folkers Landau over at Deutsche Bank, but, that's what they do. John, we've got a great set of listeners here on Bloomberg Radio and Bloomberg TV. Professor Elarian up at Cambridge emails in today. Cool. He's got, very, very important observation, away from what we do every day. He suggests that the tots are not as bad as the Jets.
Yeah.
It probably needs some explanation.
Well, yeah, the Jets are 0-5.
Yeah, but it's a way they're 0-5.
Lisa will be unhappy about that. Lisa, I didn't realize you were a Jets fan as well as a Mets fan.
I'm not. I'm actually Giants. I skew to the Giants, who also suck.
Oh, you're
frankly.
Giants.
Excuse me.
What does skewing to the Giants mean? What does that mean?
It's a New Jersey thing.
I skew to the Giants.
It's a New Jersey thing.
What does that mean? You either support them or you don't. What does skewing to one team mean?
For our international audience, they skewed over to New Jersey.
They skew both to the loss. I mean, all New York teams are losing, which is why we will continue to talk about London football from here on out.
Got that right.
I skew to whoever's doing better, relatively speaking, than the other. Nice. Alongside Lisa Bravitz and Tom Keene, I'm Jonathan Ferro. Coming up next, Deborah Fuller of the University of Washington School of Medicine. We'll do that live right here on Bloomberg TV and radio. This is Bloomberg Surveillance.
With the First Word News, I'm Ritika Gupta. It's the largest deal in the shale industry since the collapse in energy demand earlier this year. ConocoPhillips has agreed to buy Concho Resources for $9.7 billion in stock. The takeover will create a heavyweight driller in America's most prolific oil field, the Permian Basin of West Texas and New Mexico. House Speaker Nancy Pelosi has given the White House a deadline. If there's no more progress on a proposed stimulus package by tomorrow, it won't get done before the election. It's not just the House and the administration that are involved. Senate Republicans are balking at the size of the package. Still, President Trump says he is confident he could persuade the senators to back a good deal. And President Trump is trying to put a positive spin on his fundraising deficit to Joe Biden. He's telling supporters that he could raise money quickly, but he doesn't want to be beholden to donors. Trump's campaign and the Republican National Committee raised a combined $248 million in September. That's well short of Biden's $383 million. And a ceasefire between Armenia and Azerbaijan has fallen apart just hours after taking effect. It's the second truce brokered by Russia this month that failed to stop the violence. Hundreds of people have been killed in the 3 weeks since fighting broke out over a disputed region. We're one step closer to what could be the world's largest IPO. Jack Ma's Ant Group has won a key approval from Chinese regulators. They say Ant can list its shares in Hong Kong. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
Second half will be a lot stronger than the first half in China. We're heading to what we call the golden season of auto sales.
We are very confident, we're going to have another big growth, 2021 versus 2020.
We did not see people kind of holding back.
Chinese customers are into, right now, buying individual mobility.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
You will surrender your future to the virus. He's going to lock down. This guy wants to lock down. He'll listen to the scientists. If I listened totally to the scientists, we would right now have a country that would be in a massive depression. Instead of, we're like a rocket ship. Take a look at the numbers.
Things are getting worse. He continues to lie to us about the circumstances. Experts say we're likely to lose as many as 200,000 additional lives.
There is a debate in Nashville, Tennessee, this coming Thursday between President Donald Trump and former Vice President Joe Biden. Both of them on the campaign trail this weekend, coming into this week. From London and New York this morning, good morning. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Quick snapshot of the markets for you. Price action, a lift for equities, a lift for Treasury yields too. Equity futures just off session highs. We advanced 28, up around about 0.8%. Talked about that firmer euro, bounce back approaching 118. And there's the move in bonds. We give up some of that gain in yield as the session grows older. Yields up now by just a little more than 2 basis points, approaching 3 to 0.77%, Tom, on a 10-year.
Yeah, very good. There's the date again. Futures up 29. Right now, Deborah Fuller joins us. She is definitive in microbiology at the University of Washington School of Medicine. I can only say that it is our definitive microbiology program. Many people nationwide would agree with that. We just heard from the president. We just heard from Vice President Biden as well. One anti-science and one pro-science. Now Deborah Fuller on what happens when we pick up the debris November 4th. Deborah Fuller, what happens to science next year?
That's a great question. Hopefully science, it always bears out. We are able to say, for example, predict this fall surge that came from the scientists. And so the truth will out, and I think in the long run, science will win out.
We go into the autumn, into the winter, and of course we come out next year with the inauguration in the depths of winter. February, always statistically a difficult month for medicine. Tell us about the weather and the overlay of your bacteria with this terrible virus.
Yeah, so, we virologists, we have a saying that, if the virus can, it will. And what that really means is that it will find every opportunity to replicate itself and infect new hosts and to spread. And so, over the past months, it's been seeding itself in communities everywhere. And, with the fall, with the cooler weather just kind of drives people indoors into closer proximity to one another. Schools and colleges reopened. We're getting pandemic fatigue and restrictions are being relaxed, and this is just sort of creating a perfect storm for this virus to surge. It's like throwing, fertilizer on our weeds.
Not the description you want to hear about a pandemic and a virus. Dr. Fuller, the numbers have been staggering over the weekend. I believe 50,000 new cases each day diagnosed of COVID. Is this as bad as you had projected we would see heading into the fall? Or is this on a trajectory that has you concerned about being worse?
Yeah, it's definitely on a trajectory that is looking worse and worse. And we can see this happening in other countries, such as in Europe. The surge, the good news is that it is within our power to control this virus without having to go into a shutdown. We just now more than ever need to use the tools we have on hand to control this transmission, the masks, the personal hygiene, the social distancing. We just need to be more vigilant than ever and hold the line until vaccines, which are very close, can be approved and immunization can start the process of inducing immunity in the population.
Doctor, what does vigilance mean without social restrictions? Germany has been vigilant. Italy has been arguably very vigilant as well, and they're both dealing with the same increase of infections. And I just wonder how you avoid that experience and what you're learning from what is happening in Europe at the moment.
Yeah, I think that, vigilance is something that has to occur, at really a large population level. We're talking, 70, 80% of people really following, the guidelines. There has been, predictions that, if everybody or 70, 80%, 90% of people wore masks, we wouldn't have, as much transmission. And there's evidence in small communities that, are much more vigilant, where we're seeing a slower rise in the infection rate.
Dr. Fuller, can you talk a little bit about the mortality rate? People saying that the mortality rate has been coming down as doctors get better at treating the virus and the possible effects. And so you've got the likes of advisors to President Trump saying, look, let's just move to herd immunity, stop with crippling the economy, and move forward. What do you say to that?
Yeah, well, the one thing that we don't know for sure, are the long-term effects of this virus. And while we're scientists are learning more about it and are able to recognize the signs of, serious progression to the disease earlier, and we have more tools to help treat that. Even those who recover can have long-term effects on it, and the idea of achieving immunity by just letting the virus run rampant, that's just too high of a cost.
I'm going to stop the show, folks, and we're going to get a little geeky here with Dr. Fuller. We do this on a Monday. We're doing this because Pharaoh's been a complete pain today about Mookie Betts and the Los Angeles Dodgers. Dr. Fuller, I want to go to the differential equations of a virus. It's a three-factor function. It's a lot of highfalutin math. where herd immunity is stuck relatively static on the x-axis. Am I right that to demonstrate herd immunity takes essentially forever and ever?
If you just let the virus run amok, yeah. But it doesn't take forever with vaccination. Vaccination is a very efficient, process.
But when you overlay vaccination on this, the herd immunity picks up. But without vaccination, basically herd immunity to pros like you takes forever, right?
Right, and with this virus, it's unpredictable. There's evidence, in multiple labs indicating that the immunity induced by the virus itself may not be long-lasting, and so, people may be susceptible to reinfection and so on. It's really not a solution.
Well, Doctor, given what you've just said, what does that mean for the hopes of a vaccine actually being effective over a long period of time?
Scientists, the way we actually work on vaccines is we study the virus, and when a virus infects the host, it's a battle between the body and the virus. And the virus has its own tools to try to manipulate your immune system to benefit itself, actually. So, at the end of the day, usually having the body where it wins out and you have some immunity, with coronaviruses, that appears to be more short-term. So as, vaccinologists, what we've done is we've developed vaccines that are designed to theoretically be better than nature. And we're starting to see this bear out already in some of the clinical trials that have reported the results. The antibody responses are much higher than what you would get by natural immunity, and they appear to be, looking like they're persisting.
We're all hopeful, Doctor. Appreciate your time this morning.
Thank you.
Thanks for giving it to us. Thank you. Dr. Deborah Fuller there of the University of Washington. Here's the price action this morning. This Monday morning, things do pick up. Equity futures up by around about 28. We advance 0.8%. Your bond market looking a little soft. Treasuries lower, yields higher, the curve steeper, the 10-year yield in and around 77 basis points. Call it 3 basis points higher on the day. In the FX market, euro firmer, 117.84. There you go, up 0.6%. Stronger euro, weaker dollar there. From London and New York, coming up next, Marilyn Watson of BlackRock on this bond market. This is Bloomberg.
Me gustaría decirle a los empleadores que fueran más humanitarios con sus trabajadores, que les hagan valer sus derechos. Y estábamos viviendo en dos casas, en una 50 personas y en la otra otras 50. En cada casa había 5 habitaciones. En cada habitación había de 3 a 4 camas abarrotadas. Vivíamos de 6 a 7 personas. Un baño para cada habitación y una cocina para todas. Una vez que nos atendieron en el hospital, al salir nos avisó una compañera que ya nos habían reportado a migración. Gracias a Dios ahorita de salud yo estoy muy bien, pero en lo moral no estoy muy bien, porque a causa de esa enfermedad yo perdí todo, perdí mi trabajo. Yo creo que mi caso resulta un gran problema de cómo las personas migrantes estamos en riesgo de explotación por parte de los empleadores.
those you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
When everything around us, including the way we work and live, has been interrupted, uninterrupted service is peace of mind. Kimmy from Customer Support is responding to a 500% increase in daily call volume. No matter what, we keep on, so you can keep on.
The V-shaped recovery path looks very much secure.
We've seen huge holes blown in global economies, and now we're trying to patch them up.
Half the economy is going to have come back, the other half will not have come back and can't come back.
We're realizing the world is not a perfect place, and we're in this for the long haul.
Once we get stimulus, once we get a vaccine, the action is going to move very quickly.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene, a simulcast, Bloomberg Radio, Bloomberg Television worldwide. We welcome all of you to a really interesting, exciting week, 15 days to the election, but so much more going on. The information flow here extraordinary. In this hour, Chair Yellen will join us. Yes, I will ask her about the speculation of her taking a position in the Biden administration. Yes, we'll talk about climate change and even the Nobel laureates and auction process. You know what, John? None of that matters when you look. I want to go to the equity markets right now, and Ben Laidler talking about a melt-up. Is this morning the beginning of a melt-up, John?
Up 25 points, not for me to call that. Up about 0.7% on the morning, Tom. The happy talk around more stimulus, maybe. I think where we are right now just reminds me of something Mohamed Al-Arian said a number of weeks back. This market just wants to go higher.
Which Forex pair
and this market and market participants will find a narrative, a story to tell as to why it is going higher.
Maybe you can
3 months ago, a blue wave, that was bearish. 3 months forward, a blue wave potentially, that's now bullish. I think that's just the mood of the market and market participants right now.
System designed for a trending market can turn into a trap which suddenly fails to make
John Farrow, what is so important then
Imagine if you could quickly scan all currency pairs and time frames to find the best trend and dramatically increase the profitability of any method you trade. If you're struggling with erratic market chaos when the trend direction is unclear,
we've been talking about the global economy as one complete entity. There is so much variance and divergence within this global economy right now. The Chinese recovery is really well recognized. The US momentum, I think, has been underappreciated, but what is happening in Europe, that is what is truly depressing. That data and that recovery is stalling before the new restrictions that have gone on to places like France, Germany, the UK as well, Italy and Spain to control into the mix. And the data at the back half of this week, the PMIs that come a little bit later this week, Tom, I think are really important to get a read on where we're headed.
Futures up 25, down
trading within the range is unpredictable and risky unless you know exactly what you're doing. The truth is that most Forex systems or robots make money with the trend, but lose money in a choppy
there is
market.
A lift to this market
but the tricky part is to find that
the trading
trend.
Envelope or the
Let me tell you one big mistake most traders make all the time.
Lisa, all of that is great.
They're used to focusing on one specific pair
Lisa,
and
what is your
time
read in this weekend?
90% of traders only trade the major pairs,
basically this is
mainly
all about
the euro,
the
the
central bank
cable,
that will continue
the
to
Aussie
push
and the
investors
yen.
into risk.
The reason
I mean,
is
the central
clear.
bank, the
It's
Federal
beyond
Reserve,
human
has
power to
injected
watch
so much
all the currency
liquidity
pairs.
into the system that you still
The
see
Forex trendy
CCC
tool
rated
scans
bonds, the
34
lowest
Forex
of junk
pairs
rated
on all
debt,
time frames
rallying
from minute to monthly.
disproportionately. And last week, and
It
I
would
really
take
feel like
you
this is
hours
important, Tom.
analysing every
Last
single
week,
chart.
the Fed's balance sheet rose
Forex
by nearly
trendy
$100
crunches
billion
all the
to
charts
the
within a
highest level
second.
since June.
You don't
It
have
has
to
been
wait
pretty
during
much
the
flat
choppy
for a
market.
while, is now
Just pick the
creeping
best
higher. If
trending
Mike
pair at any
Schumacher
time.
is right,
It
and there is
scans
very
even the
little
exotic
barrier
currency
to them
pairs,
going up
such
a
as the
couple
Norwegian
$1 trillion,
krone,
at
the
the
Sing dollar,
smallest
or the
potential
Hong Kong dollar,
impetus,
which
why
gives you a
not go
great
into
advantage.
risk? And that
You don't
perhaps
have
is
to
what's
limit
driving
yourself
the
to
mood
basic Forex pairs, though, there are more trading opportunities out there. When one becomes choppy, throw it away and jump to another pair. Forex Trendy quickly gives you the next best pick. You can even set up audible alerts so that when there's a pretty trending trade, you won't miss it.
She's running
the Forex Trendy application works independently from your trading platform. You can use your favourite trading platforms such as MetaTrader, NinjaTrader, TradeStation, etc. because the software is actually running on our computers located in Florida. What you get is just a clean trend at any time. For a small fee, you get access to use this online application. Bring your trading to the next level with the easiest, smartest tool in the Forex arena. Just click on the big orange button below. Here's what's inside. No thick ebooks to read or complex software to install, just instant auto-analysis of the cleanest pairs and timeframes with a nice trend. No matter if you're a novice or advanced trader, everyone immediately benefits from this smart application. Now, a special bonus. Automated chart pattern recognition software that can recognize triangles, flags, wedges, and strong trend lines in all currency pairs and timeframes, so you're always prepared for every potential breakout. The audible alerts will tell you about the confirmed patterns in real time, so you don't miss the explosive price movements following the breakout. Your current approach is probably why you're not profiting consistently.
This is the problem for a lot of investors right now, where the central banks can keep financial
Are you doing the same thing and expecting different results? Forex Trendy is not a system, but a powerful trading tool that's designed to help improve the accuracy of any system or strategy that you're currently using. Click on the orange button below.
The Fed, the ECB have both said that that's what they will do. They will do as much as they need to do to ensure that we have financial stability. I think one thing that's particularly interesting now, and we've seen that again on the chatter this morning, is the debate around fiscal stimulus. We've heard from the Fed that they're seeing that as being increasingly important, but I think also the market as well is really heavily scrutinizing now as we do start to, as you say, see these second waves or coming through in the US and elsewhere in terms of COVID cases. I think it's really important now to also focus on the fiscal stimulus. Already a huge amount has been done, but as this starts to sort of trail off, I think really it's incredibly important to see what can be done further in the US and elsewhere as well. So I think on the central bank side of things, they're doing as much as they possibly can, and they have, they can also do a lot more. But I think on the fiscal side, that's really the main question now. And obviously the US election will play a large part in what happens there.
But ultimately, if you believe that central banks can just keep financial conditions loose regardless of economic conditions, Marilyn, I don't mean to go too far of this. Do you think that we have centrally planned financial markets now? Has it gone that far?
I don't think it's that far, no. I don't think they're centrally planned, and I think for that you would also need to see even greater coordination between the fiscal and the monetary policy as well. But that being said, I think the central banks, in terms of what they can do in interest rates, they do have less room to move, but they can continue to cut rates. It could go further negative. The UK could potentially go negative. Who knows? You could see further asset purchase programs and things, but I don't think we're anywhere near yet a planned economy. And you do need to see a far greater degree of coordination if that were to happen. But I think we are at the stage where central banks are doing everything that they can, but really on the fiscal side, we now need to see what can be done there further as well.
To John's point, though, there's a question of whether buying the riskiest debt at this point in the credit cycle, when people still are predicting an uptick in defaults and delinquencies, whether that's a bet that the Federal Reserve and the ECB will never withdraw from their support of the markets, and they will never shrink their balance sheets. They will never raise rates. And by never, I mean at least not in the next 2, 3, 4 years. Is that accurate?
Yes, certainly the central bank actions have pushed investors further down the risk spectrum, and we have seen, some very strong performance, as you say, and demand for, for high yield assets that are low down the risk spectrum and other assets. And I think we will continue to see that. However, I think it's harder to see the returns that we're going to get, or that we have had, going forward as well, because we've already seen a huge amount of spread compression since the wides that we saw, a few months ago. But I think, investors do continue to look for yield. They do continue to look to income.
I think given the risks that we do see coming up that we've already outlined, then I do think, maybe focusing on higher quality sources of carry at the moment, focusing on, avoiding too much duration risk, given the huge extension of risk that we've seen there. And I think, as you point out, looking at defaults and looking at what might happen there in terms of the trajectory, and looking forward to February next year, what we might see in terms of corporate outlooks, corporate forecasts, and I think it's very important to focus on that as well. So, I mean, the default risk is there. We're going to see more volatility in the markets, I think, going forward as well, but that also creates opportunities. But, as I say, I do think that investors continue to demand yield, they continue to demand income, and, you're not getting that in some of the risk-free assets. So, but I do think it's important at the moment to really focus on quality and really understand the risks around the assets that you're buying.
So what does quality mean, Marilyn, given the fact that there is duration risk?
Yeah, so obviously understanding the duration risk is something that's incredibly important, but also understanding the risks around volatility, the risks around liquidity, whether there's actually the prospect for actually, compression or price appreciation versus, I think liquidity is one of the most important things that we're focusing on right now. But as you say, I think when you're looking at the environment as a whole, then duration isn't the only risk, but it's certainly a very large one. But I think, say, credit risk, the term premium, liquidity are all things that are very important to focus on, as well as volatility, and really understanding the assets that you're buying. And when you buy an asset, understanding the risks of what happen if you want to sell that asset as well.
Marilyn, fantastic to catch up, as always. Our best to the team at BlackRock. Marilyn Watson there. Thank you. On central banks, their influence on markets and the financialization of this economy. Macquarie writing the following over the weekend. We are highly financialized, with global debt exceeding 3 times and financial assets 5 times GDP. That implies capital markets are now the dog and real economies are merely the tail. And what happens in that cloud of finance determines the reality. Leaning on some of the work of Soros, of course, Tom, that markets can shape the events they anticipate, which is why these markets are being handled and managed right now by central banks, particularly the Federal Reserve.
You touch on the reflection theory there of George Soros off of Karl Popper. Karl Weinberg watching this morning. Good morning, Dr. Weinberg. And he makes very clear, John, just as you described, that it's about aggregate demand and how you get there. And maybe it is markets within commercial banking and big negative rates that gets aggregate demand in Europe to be weaker than expected.
I got a very bearish note from Mr. Weinberg overnight. Did you get that, Tom?
I didn't see that one in my blur. I was too busy worrying about Mookie Betts.
Going into year end.
Do I read Mookie Betts or do I read Karl Weinberg?
Later.
I'm sorry.
I'd read Karl Weinberg. I think that maybe Mookie Betts might depress you even more than that Karl Weinberg.
Well, that would. I mean, Weinberg does that, but then there's Betts. And look at the tots. Keep it up, John.
Do you know the definition of Spursy? I brought this up in the Urban Dictionary for you, Tom.
Really?
Oh, no. Spursy, to consistently and inevitably fail to live up to expectations. To bottle it.
Checks out.
That is the definition of Spursy. Just so you know, I thought we were going to put that in a red banner on TV just for a moment. Alongside Tom Keane and Lisa Abramovich, I'm Jonathan Ferro.
Arsenal
live
red, why not?
Bloomberg TV and radio.
Why can't we have blue banners? Dark blue like Tom's
Equities
banners.
Up 26. We advance 0.75%. And this is Bloomberg Surveillance.
With the First Word News, I'm Ritika Gupta. It's the largest deal in the shale industry since the collapse in energy demand earlier this year. ConocoPhillips has agreed to buy Concho Resources for $9.7 billion in stock. The takeover will create a heavyweight driller in America's most prolific oil field, the Permian Basin of West Texas and New Mexico. House Speaker Nancy Pelosi has set a deadline if President Trump wants a pre-election stimulus plan. She says there has to be more progress with the White House on a deal by tomorrow. The president has said he's willing to go higher than the $1.8 trillion his team has been trying to offer Pelosi, but Senate Republicans may not go along with something that large. In China, economic recovery from the pandemic continued in the third quarter. GDP rose 4.9% from a year ago. That's less than expected, but higher than the second quarter number. Meanwhile, China's retail sales grew 3.3% in September, and industrial production was up almost 7%. The number of coronavirus cases around the world has now hit 40 million. Infections have been picking up in Europe and the US Midwest. It took 6 months to reach the first 10 million cases. The last 10 million were added in just 32 days. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
When opportunity knocks at the door, don't say, blimey, I've still got my pajamas on. Say yes to stuff and it will take you interesting places.
We're clearly going through some very unusual times and, enormous difficulties getting groups of people to agree on things.
From Bloomberg's European headquarters in the City of London, join us on Leaders with Lacqua.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
I love the Republicans, and we have some great, but they have to learn to stick together better. We have some stupid people.
I'm running as a proud Democrat, but I will govern as an American president. No red states, no blue states, just the United States.
The President of the United States, Donald Trump, there alongside former Vice President Joe Biden on the campaign trail this weekend from New York and London this morning. Good morning to you all. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. 1 hour, 12 minutes away from the opening bell. Equity futures with a lift this morning. On the S&P 500, we advanced 25. On the S&P, we're up 0.75%. In the bond market, yields up higher by around about 2 basis points to 0.77% on a 10-year. Tom, just quickly, some headlines from White House Chief of Staff Mark Meadows.
Yes, I saw those.
Said he spoke to the president about stimulus for an hour yesterday, hopeful for an agreement on relief that could be reached in the next 48 hours. So that's the latest on that front. And I say that half smiling because how many times have we been here over the last several months?
I got a big wall here, folks, with 47 TV networks on it. I got TV Monde in Paris, not that I understand a word of it. But I've got Meadows on Fox. I got Radcliffe of Intelligence with Marie over on Fox Biz. And I guess that's the conduit for the administration. John, where's Senator McConnell? Is he out doing any of these interviews?
Leader McConnell was talking about a package, a skinny deal of something in the region of $500–600 billion. Yeah. I imagine he'll listen. I think he said that over the weekend. If they come to a bipartisan deal, he'll take a look at it. But it's not up to him, isn't it? Leader McConnell's got to get it through the Senate, and there's been no evidence the last several months that he has the votes in his core constituencies in that Senate right now, Tom, to pass a bill of $2 trillion.
We focus on the stimulus with Jonathan Lieber. He is with Eurasia Group and thrilled that he could join us this morning. Jonathan Lieber, you've written tersely on stimulus as well. Meadows is pounding the drum. What's the chance anybody's going to listen to the drum and join the band?
I think it's a little late in the game to get this done right now. You had some support for a fairly large stimulus deal earlier in the summer. But with Trump's re-elections campaign prospects cratering, he just doesn't have the stroke he had in July to push something through the Senate Republican Conference. So they're a much smaller number than he is. I think it's going to be a really heavy lift to get anything close to the kind of deal Mnuchin's talking about through the Senate right now.
Our Kevin Cirilli sees the benefit to the president. He sees the benefit to moderate Democrats. Does the stimulus benefit Vice President Biden?
No, I don't think so. I mean, I think that Biden gets it done one way or the other, so it's basically neutral for him, but it's a risk that this is some kind of bipartisan deal President Trump strikes a couple weeks before the election, and that helps him. So if you're Biden or you're Pelosi, do you really want to take that risk? I mean, can you imagine being Nancy Pelosi? You cut a deal with the president 2 weeks before the election, and then he wins? You're going to be the greatest GOAT in Democratic political history. So I just don't think that this is something Pelosi really wants to do. I think it's a real risk for Biden if it happens.
I'm so naive, John. I thought that policy was about helping the country, not about just winning the election. Forgive me. Forgive me. 15 days to go. 15 days to go, John. And last time around, those polls narrowed aggressively in the president's favor in the final 2 weeks. Does doubling down on the existing strategy get it done?
You know, there's a lot of differences between now and 2016, the biggest one being just the size and consistency of Biden's national lead. This guy's been between 7 and 9 points since he clinched the nomination. There were times in 2016 where Trump was within 2 of Hillary Clinton, and that's not even come close to happening. Now, what's unique about predicting this election is that the swing states are all closer than the national polls tell you, but this has not really been, there's not been much variance in this election. So it'd be really surprising to see it tighten suddenly without a major game change in the narrative, like a big screw up at the debates or something like that for Joe Biden.
John, let's say you're right. Let's say markets are right that President Trump loses the election, that former Vice President Biden wins, that we get some sort of blue wave. Are markets adequately pricing in the potential change to taxes and other fiscal approaches of a Democratic majority Senate right now, given where people are positioning? Are they really gaming this out correctly?
Well, I think that the variable here is that most of our clients we talk to are expecting there to be a really large stimulus in Q1 of next year. And if that happens, then sure, that's positive for the economy. That's a big fiscal stimulus. That's probably good for earnings. But once you start looking through that and you look out 6 to 12 to 18 months, that's when you start seeing the tax increases and the new levels of regulation starting to bite. And I would expect markets may be a little slow to catch up to that, given that there's going to be this flood of cash in the first half of next year.
So you're uniquely positioned to talk about this because you helped craft tax policy under former President Barack Obama's regime. Which sectors, which types of companies could get hit hardest by a new tax regime such as the like that Joe Biden is proposing?
Well, the biggest threats that Biden's making are to U.S. multinational companies. So you're talking about raising the corporate tax rate below where it was during the Obama administration, but higher than it is today. But I think in some ways, more importantly, you're talking about changing the way that they tax overseas earnings in the U.S. And that's going to make U.S. businesses less competitive, make it harder for them to compete in foreign markets. And I think that, in a year or two from now, once we're under this regime, we're going to be back to the bad old days of talking about inversions and losing companies to foreign jurisdictions. There's going to be rules in place to stop that from happening. Right. But I do think that that's a bad look for the multinationals in the U.S.
I haven't asked this question yet, Jonathan, very quickly here, and very important. On the first Wednesday of November, whatever the results are, everybody's going to dash to 2022. What is that going to look like?
Well, I think the Democrats, the Democrats are fairly well positioned if you look at the Senate. They also have the opportunity to redistrict coming out of the census in 2020, which should help them in the House. But, the historical pattern here is that presidents lose seats in their first midterm elections because of the backlash. So a lot of that question depends on how much overreach you see from the first 2 years of the Biden administration.
And what's so important here, John, is I know you tried to redistrict me out of Bloomberg surveillance 3 or 4 years ago.
He's talking to John Farrow.
John Farrow.
He's absolutely talking to me.
Redistricting.
Don't worry, John. I'm working on it. I'll do it myself.
Gerrymander.
I'll get there one day.
Salem, Mass.
I'm trying.
Surveillance census.
Eurasia Group, United States, Managing Director. 1 hour at a time. We'll kind of do this slowly. We'll start doing the 8 o'clock, just Lisa and me. Then maybe we'll have 30 minutes with Tom.
Back it up.
7:30.
Megan, can you bring my walker over here?
I will say, surveillance census.
My walker right now.
Which
I mentioned a little bit earlier on the program, just quickly, that high-frequency economics note that came from Carl Weinberg. I want to bring it to you. They now forecast that barring a miraculous intervention to check this next outbreak, industrial and services sector output will decline in all the world's major economies in the fourth quarter, returning to the low levels observed in April and May. And the key part of this call, and it's a very bearish, big outlier call that comes from Carl, is that in the next round, the virus will affect our economies directly by shutting down businesses. And his point here, Tom, isn't that policymakers will shut down businesses, is that as you get that second wave and you get an infection on a production line in an office, the whole office has to clear out. And that seems to be what he's really concerned about going into the colder months, going into the winter months worldwide.
And again, that's the issue, the weather here. It is a natural disaster, and we're moving towards the winter months. And interview to interview, John, that's what we hear.
Yeah, see it in the Northern Hemisphere, in Europe. Starting to go that way in the United States as well. From London and New York this morning, good morning. A really important conversation coming up shortly with Janet Yellen, the former Federal Reserve chairwoman. That's coming up shortly on Bloomberg.
gender-neutral language at the airport and on its flights. Instead of the greeting, ladies and gentlemen, the English announcements now use phrases like all passengers or good morning and good evening. There's no change to the Japanese version because we already use which is the honorific form of everybody, and that's already gender neutral.
JETA becomes the first Japanese airline to make the change as part of its greater initiative to tackle gender-based discrimination, following some other carriers. Air Canada and EasyJet started using gender-neutral greetings last year. Japan Airlines also ditched its mandatory high heels and skirts rule for female flight attendants earlier this year after the Kutu movement went viral on social media. That was the nationwide campaign to fight the rule that some women must wear high heels at work. So JETA now allows female flight attendants to wear trousers and flats if they want. Activists here have been pushing for change, fighting against entrenched gender traditions. The Japanese government does not legally recognize same-sex partnerships, although a growing number of cities have started to. So this change towards gender-neutral language could be a symbolic step for inclusivity in Japan.
Is it your expectation to do this another 5, 10, 15 years?
It's like Whole Foods is my daughter, and I literally married my daughter off to the richest man in the world. I just kind of came along to make sure the marriage settled in well.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Radio. This is Bloomberg Surveillance alongside Tom Keene and Lisa Abramovich. I'm Jonathan Ferro. Price action Monday morning looks a little something like this on the equity market. Up 26, we advanced 0.75%, adding a little bit of weight to the S&P 500 after 3 weeks of gains. In the bond market, talked about this all morning. More happy talk around the stimulus situation down on Capitol Hill. Yields higher by 2 basis points to 0.77%. I know for many of you getting annoyed about the fact we're still talking about this. It's my job just to tell you what people are saying. It's your job to decide whether it's actually going to happen or not. In foreign exchange, euro dollar 117.83, up about 0.5%. That is a stronger euro in the mix ahead of that data later this week, Tom.
Very good. John Farrell, thank you so much. Futures up 27. Again, right now, Steve Risciuto joins us, Mizuho Securities, and this is before we speak with Chair Yellen. We're going to speak to Chair Yellen, obviously, about the speculation of the moment, which is her future employment in a Biden administration. Then we're going to talk to her about some fancy economics around climate change. Before that, we're going to talk to Mr. Risciuto about the American economy. I want to go back, Steve Risciuto, to the Yellen slack. She is most identified with the slack in the labor economy in her tenure at the Fed. How's the slack right now in the American labor economy?
Well, there's no doubt that the unemployment rate right now is elevated from where it was prior to the COVID environment. But you also have to remember a good deal of that slack in terms of temporary layoffs has been, reversed. By in April, we had 18 million workers on temporary layoff. At the end of September, we had 4.5 million workers on temporary layoff. In September, we saw a drop alone of 1.5 million workers. And as more and more of the economy has continued to open up, you see more and more of this happening. Part of the issue, I think, in terms of the slack in the labor market, though, that I think is more important, is the slack really is bigger than that. It's a global excess supply. And during the Yellen tenure, we had been in an environment which the global economy was starting to recover in a very, very nice fashion. And in this particular environment, you really just have two major economies, China and the U.S., where you're seeing some positive changes in the direction unfolding. And therefore, the global excess supply is much bigger than we saw during that. And that's one of the big concerns, is the deflationary concerns, which the Fed is addressing.
We could go all day on this, folks, but Chair Yellen is in the middle of a good conversation with Steve Risciuto. Steve, if that's the case, and I think of Dan Elpert in the age of oversupply, what does it do to global trade, and how does that impute into American GDP?
Well, I mean, what you're really seeing here is the currency has to be the equilibrating factor, and I think that's the focus behind the Fed's policy shift. The Fed wants to make sure that investors understand they're going to do everything they possibly can to avoid going down the deflation path. And if you avoid going down the deflation path, the currency gets weaker. And if the currency gets weaker, that helps immunize the U.S. economy from these global deflationary pressures and from these global competitive pressures. And that's really the path that we're going down, and that's critical. And that's why the Fed's credibility is so important here.
And John, this goes to Steve Roach, where people think it's outlandish. He's looking for the weak dollar, but that's what Mr. Rasciuto's talking about.
That's 100% correct. I mean, you think about your
Steve, it's not just the Fed that's going to keep rates at these levels. It's Europe. It's Japan. And we've seen this movie in Japanese. We've seen it in German, French, Italian, Spanish over the last 10 years. Once you stick down at zero, you stay there.
You're 100% right, Jonathan. I think the thing to understand is that they're going to be using things beyond just interest rates at this particular time. It's the balance sheet that is very, very critical. Quantitative easing worked. Quantitative easing worked to offset deflationary pressures before, and we continue to believe it's going to work going forward. And I think the Fed has made that commitment as well, and therefore it's going to be the balance sheet that really helps drive, for example, DXY, favored measure on Bloomberg in terms of where the currency is. I think we're going to hit 90 very, very soon, and I think we will eventually trade through 90 and begin heading back down to the 84 levels.
So the only variable at central banks now, Steve, could seriously just be the balance sheet, asset purchases. And when it comes to interest rates, we might just be done.
100% correct.
Wow.
It is the balance sheet. The balance sheet is really the primary driving tool in here. Now, you got to remember, there's also special SPVs that the Fed has created in terms of the whole COVID environment and what needs to be done in order to keep markets liquid. But the real driver here in terms of the direction of the currency, the direction of how much accommodation there is the balance sheet. And I think we've got a lot more we can do on the balance sheet. And I think the Fed will do more. If, for example, in the conversation you had earlier about an additional round of fiscal stimulus, I think the Fed will be very, very willing to purchase all of that. In terms, we do a $2 trillion deal, I think the balance sheet could go up by $2 trillion.
So financialization of the U.S. economy, if we do not get a fiscal support deal just in a vacuum, how much are the quantitative easing purchases actually helping the underlying economy?
I think they are, because they're keeping the currency on the weaker path, and this is the critical issue, because the domestic economy has healthy balance sheets. Household balance sheets actually improved through the COVID environment. Corporate balance sheets, even though they levered long, they were able to refinance into lower interest rates. They've got lower debt service burdens than we've seen since the 1970s. Those are healthy conditions. Banking balance sheets are very, very healthy. Their non-performing loan balances have actually gone down. Their coverage ratios have gone up. The net result is there's a good fundamental credit position here to keep the economy growing at least a trend on an ongoing basis. The stimulus and things like that, if it were to occur, simply move us above trend. In the interim, it's the currency that keeps us in this environment where we continue to grow slightly above trend and therefore use up the excess capacity that Tom began this question and answer period with over time, like we did during the last recovery expansion phase.
Okay, so Steve, let's say the Fed does essentially financialize or monetize the entirety of any deficit that the U.S. takes on for an additional round of fiscal support. There was a University of Chicago study that came out that found that 76% of workers who received unemployment insurance got more than they would have otherwise gotten paid. And this is the underpinnings of Morgan Stanley's bullish call, basically saying households have a lot of cash to spend and lower income households tend to spend more. Do you think that this type of policy is better? Basically just distribute cash to lower income households so that they can actually go out and spend, and that will support the economy the most?
Look, you are 100% correct that a lot of the people who received the benefits received more than they would have gotten under normal pay. That's the real reason why the household balance sheet has done better. And yes, that's the reason why the savings rate has gone up. That's why non-performing loan balance has gone down. That's all constructive development. Making a decision as to which is the right way to go forward forward in terms of additional stimulus. Clearly, what we're trying to do in this environment is not a traditional macroeconomic stimulus, because we're getting over a COVID divide where basically incomes are being restrained because of lockdown type environments. And so therefore, it is a natural process to go to try to replace that through these kind of transfer payments. And therefore, it seems to be the right way to go in terms of additional stimulus going forward. The real problem is once we get beyond this COVID divide, you're all concerned about what happens in terms of, you know, the winter, the third wave or second wave, whatever you want to call it, environment. The answer is if we continue going down this stimulus path, after we get past that and we transit from a traditional Keynesian type fiscal policy into an MMT type fiscal policy, that's when we really have to worry about the net concerns that will come out as a result of it. Remember, the last time we went down these kind of MMT path, which was basically the Johnson Great Society experiment, we wound up with double-digit inflation and eventually stagflation and eventually 26% short-term interest rates to break the back of inflation. So we have to be careful that at some point we're going to have to transit away from Keynesian fiscal policy, which is what I think they're pursuing today, and worry about them moving into MMT.
The Volckers left the Fed a long time ago. Steve, great to catch up, sir. Steve Rasciuto of Mizuho Securities. I lost count of the amount of wows that we had to use in that particular conversation. $2 trillion of stimulus.
Yeah.
Just picture that, Tom. $2 trillion in fiscal, and the Fed buys it all. Hey, given what they've done over the last 9 months, maybe that's not a wow story. We've seen it.
This is why Rasciuto is truly world class. I've done panels with him, folks, where he literally stops the audience. His discussion of currency, John, and I'm going to say this, and this is not an editorial, but, you know, talk to Barry Eichengreen out of Janet Yellen's Berkeley. But the idea that the U.S. has an exorbitant privilege here is malarkey. If you run Japan yen through 100, through 90, and even get it to a stronger yen, the Japanese government will react. There's no end for buts about that.
This was the appetizer for the main course. That is coming up next with Janet Yellen, the former Federal Reserve Chair,
3-hour conversation
right here on Bloomberg TV and radio. Looking forward to that. I'll sit back from London and New York this morning. Good morning. Equity futures advancing on the S&P 500. We're up 26, call it 27 points higher, advancing around about 0.8%. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Heard on Bloomberg Radio, seen on Bloomberg TV. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. House Speaker Nancy Pelosi has given the White House a deadline if there's no more progress on a proposed stimulus package by tomorrow. It won't get done before the election. It's not just the House and the administration that are involved. Senate Republicans are balking at the size of the package. Still, President Trump says he's confident he could persuade the senators to back a good deal. And President Trump is trying to put a positive spin on his fundraising deficit to Joe Biden. He's telling supporters that he could raise money quickly, but he doesn't want to be beholden to donors. Trump's campaign and the Republican National Committee raised a combined $248 million in September. That was well short of Biden's $383 million. And stock trading resumed on Euronext markets after a 3-hour shutdown caused by a technical issue. It was the biggest outage to hit the exchange in 2 years. Euronext markets in France, Belgium, the Netherlands, Portugal and Ireland were also affected. Exchanges in Tokyo and Mexico City suffered outages earlier this month. And we're one step closer to what could be the world's largest IPO. Jack Ma's Ant Group has won a key approval from Chinese regulators. They say Ant can list its shares in Hong Kong and also plans to list shares in Shanghai at the same time. The company could raise about $35 billion from the dual listing. And American Airlines has plans to debut the revamped Boeing 737 MAX at the end of the year. It will be the Americans' first flight with the MAX since the plane was grounded for safety reasons back in March 2019. The airline will fly the plane on New York-Miami route from December 29th to January the 4th. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Bloomberg Surveillance. Good morning, everyone. On radio and on television worldwide. Lisa Bramwitz, Tom Keene, and John Farrow. Thrilled that you're with us today. And now a wonderful opportunity to speak to the 15th chairman of the Federal Reserve System, Janet Yellen, a Fed chair through some of the most difficult years of this nation. And of course, we mentioned earlier her work on an American labor economy to bring it out of that slack. Of course, Yellen of Yale, of a time of Tobin and Stiglitz, and now after the Fed at the Brookings Institution with important work with a group of 30 on climate. I want to get to that, Chair Yellen, in a moment, but I really must ask about the weekend speculation of Treasury Secretary Yellen. If we were to get a Biden administration, would you be willing to serve for a President Biden?
I appreciate your asking and the notion that it's a job I can do, but I really have no comment on that. I'm sorry.
Well, that would be good, and we, of course, knew that would be the gracious answer from Janet Yellen. Chair Yellen, away from the monetary discussion, and maybe we'll touch on that a bit here, we must speak about this important research. You were steeped in this. Long ago and far away, a Nobel laureate introduced us to auction theory, speaking about Richard Scarry in children's books at a Nobel Prize speech in Stockholm. This is long ago and far away.
You're very right. That was my spouse who won the Nobel Prize and discussed the relevance of Richard Scarry to his work.
Now, Mr. Akerlof's wonderful speech there, that really advent with Stiglitz of what we're talking about here. Wilson and Milgram, they're at a small school across the pond, Chair Yellen.
Yes,
just took the trophy as well. Can auction theory help us solve climate change by fixing carbon pricing? I see no evidence that it can do it. Can we actually get to a legitimate, workable auction market for climate change through carbon pricing?
Well, let me say, referring to the Group of 30 report that we just put out, we urge governments to take the steps that are necessary to get a transition to net zero, and carbon pricing is central to that. So we strongly believe that every government should price emissions, and while that's not the only policy that's necessary, that is a critical tool to create the right incentives for a transition to net zero. There are different ways of doing it. You said auction theory. So one way to do this is to limit emissions by requiring permits to emit greenhouse gases, and they would create a market in which they would be priced. It's possible to auction the permits. If the permits are auctioned, I'm not aware of any country that's doing that now, but that would generate revenue that could be used for many different purposes, including compensating low-income people. But a more straightforward way to do this, and it's what I would recommend for the United States, that hopefully we will, in the years ahead, go in this direction, is simply to put in place a carbon tax. A very efficient way to price carbon would be to go to the mine head, the well, where energy that creates carbon emissions enters the economy, and to simply levy a tax. So I think that's an easier and more efficient way than auctioning permits, but one way or another, we think carbon pricing is important.
With your report with Governor Carney, and with all of the efforts, Jacob Frenkel and all of the Group of 30, if we say that auction pricing has failed, where is the evidence that these societies will do a carbon tax? Are you optimistic we can get a carbon tax initiated country to country?
Well, different countries have taken different approaches, and what we're looking for is carbon pricing. for the United States that doesn't have this in place, I would, and other countries that have not started going down this route, I think a carbon tax is a reasonable way to go, but auctioning off permits or simply putting in place a system where there needs to be a permit to emit, that's an approach that we see in many European countries, and we're not criticizing that as an alternative.
Chair Yellen, as I was reading this report, I was struck by the firepower of the people who co-authored this. It's who's who in central banking weighing in on important policy. And I know you've been called on to weigh in on other important policy in the United States. In August, it was reported that you'd had conversations with the Biden-Harris camp about how to fix the economy going forward. Can you share anything from what you think we should do to get the economy back on track from here?
Right. Well, let me say that I did meet with Biden and Harris and brief them about financial sector issues, but I'm not working with the campaign. But you asked me what I think we need to do to get the economy back on track. So I would say what heads my list is dealing more effectively with the pandemic, with the health-related issues, getting the infection level under control through contact tracing, testing, isolation of people who have it. I think we need a much more effective effort than we've had. And if we have that, it'll be good not only for health, but for being able to open up the economy. And we've seen that in countries ranging from Germany to Korea to China that have been successful. And then we need support for the economy, both for monetary and fiscal policy. And monetary policy has already done a huge amount. Fiscal policy response in the United States has been extremely impressive, but actually it's much larger, the fiscal support, than what was done after the 2008-9 financial crisis. But the fiscal support has now lapsed. And so far, spending has held up. Unemployed workers who got that extra $600 a week through the end of July, they use that to stay current on their bills, to support their spending. They even stash some of it away so that they've been able to get through this last couple of months and pay their bills. Yeah. But it's running out, and I think we need to do that. And state and local governments also face huge budget shortfalls. I'm working on a task force with the governor of California to address the pandemic. They face a $54 billion shortfall this year. I think that's very important, too.
So in the meantime, Steve Rasciuto of Mizuho just was on. He said that if Congress were to pass a $2 trillion fiscal support plan, that he expects the Federal Reserve to potentially buy up all of that in order to help things along. Do you think that that's an advisable step?
So the Federal Reserve's asset purchases, they've not made clear their plans going forward, and I'm expecting them to offer more guidance. But their objective there is going to be to try to keep both long and short interest rates at low levels to support an economic recovery. It is not their objective ever to directly try to help the federal government finance its budget deficit, and that would be a very dangerous kind of support to provide. But I do expect, I think asset purchases have worked. They're holding down longer term rates, and I expect there to be ongoing purchases, but probably not geared to the federal deficit.
Chair Yellen, we are rebuilding our institutions out of this natural disaster. I want to go back to James Tobin a few years ago, who you took your PhD with, where he introduced with Nordhaus the measure of our welfare system, just simply thinking about the welfare state within a capitalistic market. We now come up to where we are now with this historic election, and we've got the Democrats trying to get back to some form of social construct, and Mr. Trump and others with a Lockean individualistic nature as well. How do you perceive how we move forward with our new capitalism, our new welfare state, given the fiscal deficits, given the trade deficit where it is, and given a monetary theory that seems to be extended and exhausted? What does the new system look like for you in the next few years?
So that's a very hard and comprehensive question, but I would say that I think fiscal policy needs to play an active role. Once upon a time, starting in the 1980s, there was a view that the Fed can handle the job of keeping the economy operating at full employment, and fiscal policy should focus on allocative issues. And now we're faced with a world characterized by secular stagnation. There is a surfeit, too much saving in the global economy, especially among developed countries, and weak investment demand. And it's been pushing down real rates of interest and depriving monetary policy of a lot of the ability it had to address economic weakness. And you know, I would never have imagined when the 2008 crisis hit that short rates would stay at zero for 7 full years. And here we are back again with zero short rates. And of course, there are unconventional tools, asset purchases, forward guidance that expand what monetary policy can do. But there are some limits. And it's important for fiscal policy to fill in that gap. And I believe while the pandemic is still seriously affecting the economy, we need to continue extraordinary fiscal support. But even beyond that, I think it will be necessary. But a good side of low interest rates is that it reduces the interest burden of the debt. And I think it makes it possible, and it's not a short-run phenomenon, short rates. It's something that's going to probably be with us for many years to come, and we can afford to have more debt than we used to think was sustainable.
Janet Yellen, thank you so much. A most generous conversation, of course, in celebration of our Group of 30 report with Governor Carney on our place forward with climate control. Lisa, I'll be honest, I did not expect that from Chair Yellen to have that much discussion about the current state of affairs. Usually ex-chairmen and chairwomen, they hold back. She did not.
Yeah, although I will say this is shifting, and we're seeing that tone shift within the Federal Reserve currently, given the fact that they are saying, look, we need the fiscal response. If we don't get it, there is only so much we can do. That has been consistent. Well,
an extraordinary conversation there with Chair Yellen about the moment we're in, as she, of course, the news item there at the beginning where she's just simply not going to talk about the speculation. Names, I know Hans Nichols wrote this up with Axios, Brainerd, Yellen, Roger Ferguson mentioned, the gentleman from the Atlanta Fed, Dr. Bostic.
Tom Keane.
As well. No.
Can you definitively say?
What are you? You took Pharaoh Kool-Aid today? That's what it is. Coming up, an important conversation, the gentleman from Delta. This is Bloomberg. Good morning on radio, on television.
The Census Bureau has asked Congress for a 120 extension. I don't know that you even have to ask, and I think 120 days isn't nearly enough.
Some things you see coming, some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
That over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
From New York and London for our audience worldwide, good morning, good morning. The countdown to the open starts right now. 30 minutes away from the opening bow with equity futures up 23. We advance 0.7%. We begin with the big issue. Wrestling with a second wave, setting records throughout much of Europe, millions facing tighter restrictions. Italy implementing more targeted containment, and Ireland preparing some of the region's toughest measures. Global finance chiefs and central bankers pledging to maintain strong support as the pandemic threatens long-lasting scars on the economy. The fate of additional stimulus for the U.S. before next month's election set to be decided this week. Speaker Nancy Pelosi announcing a Tuesday deadline to reach an agreement with the White House.
Well, here's the thing. The 48 only relates to if we want to get it done before the election, which we do. But we're saying to them, we have to freeze the design on some of these things. Are we going with it or not? And what is the language?
The president renewing his offer to go beyond the $2.2 trillion proposal despite continuing warnings by Senate Majority Leader Mitch McConnell.
Nancy Pelosi, maybe he's coming along. We'll find out. We want to do it. I want to do it at a bigger number than she wants. That doesn't mean all the Republicans agree with me, but I think they will in the end.
The stimulus merry-go-round still spinning. Kevin Cirilli, Bloomberg chief Washington correspondent, joins us right now. Kevin, this audience is sick to death of this conversation. Is this posturing or real policy making? And does the next 48 hours actually matter?
It's the art of the deal. Look, I think there's some new headlines crossing the Bloomberg terminal, a couple that I want to note. Mark Meadows, the president's chief of staff, speaking on Fox earlier this morning, saying that he spoke to President Trump for 1 hour, Jonathan, yesterday. And really, I was told by one source over the weekend that the president's insistence of getting a number larger than what Speaker Pelosi has advocated for at $2.2 trillion is, in a way, trying to provide political cover for Republicans in the Senate who might actually say, well, Speaker Pelosi and Democrats have a lower estimate than what the president had wanted. So in a way, Speaker Pelosi becomes the compromised number in the middle. Follow with me there, because that's according to one staffer for Republicans. The bottom line, the speaker has said that she wants there to be some type of deal within the next 24 hours or some type of proposal that is put forth. And then all pressure goes between the dynamic of the Senate leadership and Leader McConnell, as well as the White House.
What have you heard from Leader McConnell in the last week?
That there is an apprehension to get on board with something that is that significant of an amount of money. And if you stare down the broader business community, and there are several in the business community, prominent Republican donors, Jonathan, who feel that this type of stimulus at that number, upwards of $2 trillion, is not warranted at this particular moment. So it is a fundamental fight of differences in ideological fiscal policy.
Let's talk about the campaign, Kevin, because this, for many people, is just that, campaigning. There is a debate in Nashville, Tennessee this coming Thursday. Get me to Thursday. What happens in between?
In between, the president as well as Democratic presidential nominee Joe Biden are flooding the campaign trail, flooding the airwaves. I'm struck by how Joe Biden's campaign is adopting to more traditional mechanisms of political advertising, trying to lower some of the margins of more rural parts of the country, a clear strategic shift away from that. In terms of the debate, the president would have an opportunity to discuss fiscal stimulus, but also one last closing argument, and this has largely eluded the president's reelection campaign, one last public effort to turn the dynamics and the trajectory of this race around. I would note CBS tracking polls in battleground states over the weekend have the race tightening in states like Michigan and Wisconsin. But no doubt, the Biden campaign trying to do everything they can not to have a repeat of 2016. There is a palpable level of anxiety and, dare I say, superstition that they don't want to jinx anything, given the positive polls that the Biden campaign and Democrats have seen in recent weeks.
Kevin, 15 days to go. Great to catch up, sir. Kevin's already there, down in Washington, D.C. Thank you. Here's the price action, 26 minutes away from the opening bell this Monday morning. We are set up as follows in the equity market. 3 weeks of gains on the S&P 500. We add just a little bit of weight to that, up 24. We advance 0.7%. All the happy talk around a stimulus plan. Look, it's my job to tell you what people are saying. You decide at home whether you think it's going to happen or not. In the bond market, yields higher by 2 basis points to 0.77%. That's the price action. Here's a view from UBS and Mark Haefele, recommending investors look beyond the near-term uncertainty and writing the following. Whatever the outcome of the U.S. election, we think new stimulus will roll out after the vote and lift economic growth. We expect the rally to broaden out and incorporate more cyclical areas of the market, with interest rates close to zero for the foreseeable future. Being invested is the only option. Mark joins us right now. Mark, that final point, I think, is probably one of the most important points at the moment. Why now is a good time to invest when many people listen to these kind of conversations and just think, I'll sit this out, I'll see in a few weeks' time? Why is now the right time to make a move, Mark?
Well, I think that there's a lot of opportunity now because of the volatility and the uncertainty. And if you think about what's happened to some of the mega caps in tech, they represent the new normal that we know that we're going to see in our future, with lower interest rates, a more local economy, a more digital economy. But we have to keep in mind that there will be some form of stimulus and there will be progress on the virus response. And that will give us a little bit of a more normal way of life. And we think this is an opportunity to position for some of those names and those equities that will benefit as we get more normality.
To be clear, Mark, your outlook does not hinge on what happens when we wake up November 4th.
That's right, because whether it is a Republican administration that focuses perhaps more on tax cuts, or a Democratic administration that focuses more on spending on the fiscal side, or it is, as you were just reporting, some combination of Democrats and Republicans who think that fiscal spending is important. We do see this stimulus that has been extraordinary this year on the monetary side and on the fiscal side continuing into next year, with rates remaining low, and then a better outlook on the economy due to what is happening with COVID and our belief that we will get a vaccine that starts getting deployed in Q1.
Well, talk to me about where you want to take that cyclical exposure ahead of that, Mark.
Right. So I think one of the very interesting areas, and it fits into an extraordinary conversation you just had on Bloomberg with Chair Yellen, is around green tech in Europe. The fiscal stimulus in Europe is 1.85 trillion euros of it is targeted towards green tech. And so we think that's an interesting area. And then in the United States, for example, moving more towards mid and small cap exposure can get you some of that cyclicality without dipping too much into value and away from growth.
Is it fair to say then the key risk to your outlook, your call, is a vaccine disappointment in Q1 then?
I think that, so the way I would say it is that we know that there are going to be some bad headlines crossing the tape between now and next summer. And we know there's going to be some good headlines. And so the order that it happens, right? If we start getting great vaccine headlines in the next month, that will lift markets sooner rather than later. Certainly, if we get delayed and the vaccine, nothing starts to work and we get into the summer, I think that could delay the return of the market unless we get a surprise on the fiscal and the monetary stimulus side, which is on the table, right? So we don't know what the order is on this good and bad news flow.
Yeah, there just seems to be a lot of nervousness right now, Mark, and I want to take the other side of things just for the sake of this conversation. We're coming into the winter. The data out of Europe on the economic side does not look great even before these restrictions went on. And what is happening with the virus quite clearly across the continent there doesn't look great either. There's a worry that what we're seeing play out in Europe right now is in America's future. And the only thing I think anyone has confidence and enthusiasm around is the data coming out of China. And I'm not sure how much confidence you can have in the data coming out of China. That would be the view of many people. So, Mark, with that in mind, with the risk that winter gets messier, choppier, and some of the cyclical trades that you're pushing people to put on, what's on the other side to protect against the downside? Where are you positioned around that?
Well, there's two sides to that positioning. One is on the downside and looking to things like gold, which could prove to be a hedge here if we get a setback and that kind of nervousness and uncertainty increases. A second area that you could look to is on, for example, investment grade or high yield in the United States or fixed income in general, where we believe that central bank support will remain in place over the medium term. But I think that the second part of what you're saying there is the diversification towards Asia, where we are seeing the recovery. We feel very strongly about diversifying tech exposure into things like 5G, and that is also an Asia play as well. And then I think Asian high yield also has attractive yields right now that our international clients are looking at.
Mark, always smart and always great to get you on the show. We appreciate your time this morning. Mark Hayfield there of UBS. Equity futures up 25. We advanced 0.7% at the market desk with the stock movers ahead of the opening bell. Here's Bloomberg's Abigail Doolittle.
John, well, we do have some outperformance for that tech-heavy NASDAQ, so let's start out with some of the mega-cap names, including Apple, which is popping. This, as an industry reports, is that iPhone 12 pre-orders are double what the iPhone 11 pre-orders were last year at this time. Apple right now higher after a 4-week winning streak. Tesla also higher on the news that they're starting to export their China-made cars to Europe. Netflix also higher, up about 1%, as the speculation continues to run around that they are going to raise prices based on a price raise in Canada, and also the fact that they have stopped giving the free trial. They, of course, report tomorrow after the bell, Tesla Wednesday after the bell, so it's a big week. And then finally, it's a small med tech name, but with a big move. We have OraSure Technologies higher, as they have been approved for the first at-home saliva COVID-19 test. This, of course, could be a big business. The Rockefeller Foundation, John, right now is estimating that there will be 2.4 billion COVID-19 tests in the U.S. given next year. So again, this company up in a big way on the day.
Very cool developments. Abigail, thank you. 19 minutes away from the opening bell. Equities up. Coming up on this program, China's recovery from the pandemic continuing, setting it apart from other nations struggling to avoid renewed restrictions. That conversation up next with Academy's head of macro strategy, Peter Cheer, just around the corner from London and New York. This is Bloomberg.
women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
We have seen a resurgence of cases in Europe.
We keep seeing this new cases rising again.
More draconian lockdowns.
We're now, deep into the second wave of the pandemic.
We have to temper down the expectation of its impact on the economy.
China's clearly experiencing a V-shaped recovery.
China is an incredibly important driver of growth globally and will remain so, and it's likely to increase going forward.
The key variable for me will be the U.S.
There's a lot of excess saving that are waiting to be spent. Pent-up demand is high.
The U.S. housing market has been on fire.
The consumer in the U.S. is in a good position.
Clearly, there's a lot of momentum. I actually think the world economy is continuing to show a pretty decent recovery from this mess.
The US momentum perhaps underappreciated. China's recovery from the depths of the pandemic, that continues, setting it apart from Europe, where leaders are grappling with tougher restrictions amid a fading recovery. For more, let's turn to our international economics and policy correspondent, Mike McKee. Good morning, Mike.
Good morning, John. The problem we have, of course, is that the regular indicators that come out on a monthly basis are way behind in terms of keeping up with what's going on, except perhaps in China. And China is the location of the good news this morning. The economy expanding in the third quarter by 4.9%, a little bit less than forecast. But the big thing is they were held back by a rush of imports, which slows their GDP a little bit. So let's take a look at the underlying numbers. And as you can see, industrial production up 6.9%, retail sales up 3.3%, investment up 0.8% after contracting in prior months. They've got a real V-shaped turnaround going in China right now. They also have very few, if any, cases of COVID because of their lockdown policies. That's not been the case in Europe and the United States, unfortunately. In Europe, they are experiencing a lot more cases right now. And so the feeling is we're going to start seeing the economy start to roll over there. We get PMI data this week, and you can see services and the composite there have rolled over already. And the forecasts are we're going to see them go below 50, suggesting contraction. And that's a problem, obviously, for the European economies going forward as caseloads continue to rise. Same story here in the United States. Now, the U.S. is, as you mentioned, doing a little bit better, expanding a little bit more quickly than people had forecast back in, say, May or June. And we get the numbers on a daily basis that suggest now, though, that we're starting to roll over. Here's the forecast. If you do the Atlanta Fed GDP Now number, that red circle is where we think GDP will come back to in the third quarter. And that's not bad. It brings us almost back to where we were. But the blue line is where we would have been if we'd continued to grow without the pandemic. So the question is, can we close that gap? And right now, as caseloads continue to rise in the U.S., there's a growing fear we might not be able to. And maybe I didn't bring a chart of it, John, but maybe the thing that we all want to look at is the number of COVID cases and how fast they are growing in various parts of the world.
Mike McKee, we'll catch up with you later in the week on that. particular point. Mike McKee, thank you very much, sir. 13 minutes away from the opening bell, equity futures up 25 on the S&P 500. We do advance by 0.7%. The data out of Europe, as Mike points out, worrying. The story in foreign exchange today, though, weaker dollar through all of G10. Euro dollar 117.80, up around about 0.5% there. Here's the story from Academy's Peter Cheer, remaining cautious while expecting markets to survive potential setbacks to the recovery. He writes the following: as long as markets believe that stimulus is coming, markets can shrug off potential near-term economic hits, but the strength of that conviction could be tested as the election nears. Peter Cheer joins us now for more. Peter, it's interesting. 10 minutes ago, I have a conversation with UBS about the outcome of the election and whether his call, their outlook, hinges on what we wake up to November 4th. And often the response I get is, no, it doesn't. Why does it matter so much, Peter?
I think there's a chance that it won't matter, but we really do need stimulus, and we need to see the follow-through on stimulus. And I think, again, we've talked before about the three types of stimulus: Band-Aid stimulus, which merely gets us over the hump, versus infrastructure spending or real manufacturing repatriation stimulus. And so long as those latter ones are hopeful, we can get there. So long as there's a belief that we won't tax the heck out of corporations, I think it's hopeful. But we will get more clarity on that after the election.
Does the divergence you're seeing worldwide matter at all? Peter, it's amazing to me. This recovery in China looks so resilient. And this recovery in the United States, really underappreciated how much momentum we've got going into fall, going into winter. And then you've just got Europe, the outlier, just a struggle, even before the latest restrictions. What does that divergence between those regions, Peter, right now mean to you?
You know, I think the China divergence makes some sense. If you go back to the U.S. economy, right, we had what we've been calling haves and have-nots. So there were companies that were doing phenomenally well, and they were actually constrained by supply. So China is the supplier to the world. It makes sense their economy is growing. I think how they treated lockdowns was fairly harsh. I do look at Europe, and it's very concerning. They don't seem to have it under control, and we seem headed for a big slowdown in Europe. And I am concerned, especially without stimulus, that the U.S. faces that same sort of slowdown.
So you like the United States potentially, but worry about it facing the slowdown Europe faces. At the same time, you like the have-nots, Peter. Can you put all that together for me? Because that's super confusing. Why do you like the have-nots?
Because I do think we are slowly coming through this. Even with the increased caseload, we're much better at dealing with hospitalizations. We're doing much better at treatment. So I think the death rate is going to be very, very low. So all that improvement means even with the higher caseload, the economy is not going to pull back to where it was. I do believe that hope for stimulus is going to continue to kick up the economy. And once you start thinking about it that way, then you can look at these industries and sectors, whether it's banking, whether it's energy, that just really haven't done that well, small caps, at the expense of the big favored big techs. And I think that's what you're going to see, some compression. And you've seen a lot of that already. The Russell 2000 versus the NASDAQ 100 diverged by 34% in favor of the NASDAQ. It's down to 24%. I think there's a lot more room to run as we get stimulus, as we get a belief that the U.S. economy will do well, that money's going to flow back into those have-not stocks.
How dependent are some of those calls on higher yields, Pete?
You know, I think we need to keep yields where they are. I can see the 10-year getting to 1 to 1.25%. I think that's a more natural range for that. I think if we start getting above 1.25% on the 10-year, everything's a little bit in trouble, but I do think the Fed's going to work hard to keep that. As you've talked about before, and I completely agree with, I think we're going to see a U.S. dollar decline. I think that is long-term and secular, because what we are doing is artificially keeping rates low here while trying to create inflation. And I think the outcome of that isn't going to be higher yields as we would normally get, but a weaker dollar. So I think dealing with a weaker dollar is something we have to deal with this year.
Pete, just a final question from me. You and I often talk about the mood of the market and the reaction function of investors. It seems to me, particularly over the last couple of months, that we make the narrative up after we've seen the price move just to kind of fit the price action we've seen over the last several months. And maybe that's true forever. But Pete, at the moment, that's what it feels like, that this market just wants to go higher, that market participants wants to wish it higher, that everything is half glass full, not half glass half empty. What's your take on that, Peter? Just the mood of clients at the moment when you have that conversation with them?
It does feel like people are looking for reasons to be bullish. You know, we've rallied every single time there's a stimulus headline, despite the fact that none have come true. There's talk about whale trades. I do think that I I'm very actually concerned about the lack of liquidity in the market and what's driving markets. And I think too few trades now have a much more meaningful impact on the market. So while everyone's being so positive, that's why I think you get a bit of a pullback, especially in those high-flying names. I think the valuations are stretched. Everyone's too positive, and it wouldn't take much to get a pullback in those. And again, those have-not sectors where people really don't like and seem to come up with excuses not to invest in, maybe go there and look at value. Everyone hates value. That tells me that I'd rather own some value here. If we're due for any sort of hiccup, it's probably not going to hit value stocks.
Peter Cheer of Academy Securities. Pete, great to get you on the program this morning. Got to get you on ahead of that election as well. Peter Cheer there. Thank you, sir. Coming up on this program, the analyst action you need to know. That'll be next in our morning calls. And then later, JP Morgan's Samantha Azzarello joins us to preview another big week of earnings. That conversation coming up around the opening bout. From London and New York, this is Bloomberg.
Ada 3 kelompok pengungsi tersebut yang sudah berpencar arah. Kemudian kami dari Polsek Banda Sakti berkoordinasi dengan perangkat desa Kampung Jomblang melakukan upaya pengumpulan secara persuasif serta minta tolong kepada warga. Alhamdulillah warga yang terpecah semuanya berkumpul.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
A little more than 4 minutes until the opening bow this morning. Good morning. This Monday morning, equities advance up 25 on the S&P. Let's get you some morning calls. A look at some of the analyst recommendations on Wall Street this Monday morning. First up, BMO, upgrading Kansas City Southern to an outperform 205 price target. The analyst seeing the potential for significant growth while facing fewer hurdles than its competition. That stock up 1%. B of A, Bank of America downgrading VF Corp to underperform $65 price target. The analyst citing limited upside for the company's Vans and North Face products. And finally, Wedbush raising its Tesla price target to 500, a neutral rating. Dan Ives, good friend of this show, expecting the automaker to top Wall Street's estimates when it reports results this coming Wednesday. That stock up by a little more than 1.5%. Coming up next, JP Morgan's Samantha Azzarello joins us to preview another busy week of corporate earnings and more.
us, including the way we work and live, has been interrupted. Uninterrupted service is peace of mind. Kimmy from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
"24 seconds away from the opening bell in New York City, 15 days away from an election in the United States of America. The next big stop on a campaign trail, Tennessee, Nashville. A debate between the President of the United States, Donald Trump, and a former Vice President and presidential hopeful, Joe Biden. Equities up 25, switch up the board in the bond market. Yields on a 10-year just coming up a little bit, up 2 to 0.77% on a 10-year. In the FX market, euro-dollar, stronger euro here, weaker dollar throughout all G10. Euro-dollar 117.80, really important PMI data back end of the week. What did Europe look like in the month of October as those restrictions started to come through? That's going to be a big focal point for this market a little bit later. Back end of the week for you. We'll run you through the week ahead a little bit later in the program. Crude with a bid up about 0.25%, almost a 41 handle there on WTI. That's the cross-asset price action this Monday. Let's get you the movers. Back with us. Here's Abigail.
John, let's take a look at a lot of the big name movers here on the open, starting out with Amazon, which is popping higher in contrast to last week when it actually was down, despite the fact that the NASDAQ 100 was higher. But today we have the stock up about 0.8%, as Piper is saying that Prime Day sales could be up 49%, and that would be about $10.6 billion in total sales over the course of that two-day event last week. As for ConocoPhillips, those shares are a little bit higher as the acquirer, interestingly enough, of course, of Concho Resources, the $9.7 billion stock deal for that Permian Basin E&P company. American Airlines up 1.2% after they have put the 737 MAX back on the U.S. schedule pending approval. Separately, daily U.S. passengers hit 1 million for the first time since March recently. And then GE also higher on that 737 news. They could benefit from a potential approval. Plus, they have joined PIMCO to create a $3 billion aircraft leasing company. And then very quickly, taking a look at some healthcare movers on the morning, CVS Health is higher. This after they said that they are hiring 15,000 additional workers to administer the COVID-19 vaccines once they come out. And then we have a mixed bag at this point for Pfizer and Moderna. But of course, both of these healthcare companies are still in the running for vaccine candidates. Many other companies have had theirs put on hold, but Pfizer and Moderna still working to get their vaccines on the market approved as quickly as possible, John.
Abigail, thank you. There is hope in the vaccine race. Abigail, we'll touch base with you very shortly. About 2 minutes into this session, your equity market up 0.4% on the S&P 500. Every single sector on the S&P right now is positive, with the exception of energy, slightly negative. That sector down by around about 0.1%. Earnings season really picking up pace from here. More than half of the S&P 500 reporting results over the next 2 weeks alone. Breaking it down, Bloomberg's Katie Lyons. Hey, Katie.
Hey, John. Well, of course, we're coming off the first week of earnings season, and thus far, more than 83% of companies have actually beat expectations on the bottom line. We'll see if that trend continues as we get another 90 or so members of the S&P 500 reporting just this week, including a number of big tech names. IBM due after the bell. We also get Netflix and Snap on Tuesday, and then, of course, a lot of eyes will be on Tesla on Wednesday. Remember, Tesla posted its 4th consecutive quarterly profit last quarter, but that still wasn't enough for inclusion in the S&P 500. As a result, we cannot count Tesla in this next data point, which is that when you tally the market cap of all the S&P members reporting this week, it comes to about $4.5 trillion. But it's really next week that is the big one, John. Nearly $15 trillion in market cap reporting, including basically all of the mega cap tech stocks, including Apple, Amazon, Alphabet, Microsoft and Facebook, they're all due out over the course of that week, and they obviously carry a ton of weight, could very well move the market with their results. Now, tech broadly is expected to hold up quite well this quarter. Earnings only expected to drop about 3.2% relative to the more than 21% decline expected for companies overall. And of course, that 21% drop, while it is large, would still represent that we're past the bottom in earnings, John. Remember, in the second quarter was the really dismal numbers, down more than 30%. But even despite that, stocks were able to rise about 6% over that reporting period. We'll see if they're able to do so again, and if earnings beats will actually be rewarded. And my big question, John, are we actually going to get any guidance this quarter? Only 69 companies last quarter gave a view for the third quarter. Are we going to get anything for the fourth, or is there still just too much uncertainty out there, John?
I'm not sure who can offer guidance at this point. Kelly Lyons, thank you. Thank you very much. JP Morgan Samantha Azzarello setting a low bar for quarterly results, writing the following. Expect third quarter earnings season to be better but still bad. Consensus estimates are currently calling for headline earnings to drop 21% versus last year, with every sector expected to contract. Samantha joins us now over the phone. Sam, always great to catch up with you. It's an expectations game. You underpromise, you overdeliver. What are you actually looking for this time around?
So that's the key point, right? This is all about expectations. And I would just say that for this quarter, consensus estimates improved about 4%. Okay, so a little bit of positive news. And that's compared to an average. Normally we see revisions for earnings go down. They're cut about 6% between quarters. So, not the most eloquently stated theme, but, as it was just said, we've hit the bottom. And now delta-wise, directionally, we're headed in the right direction. I think we kind of know how this quarter is going to shake out. And then, without bringing us into the future, what we really need to see is following quarter, Q4, are we muddling, right? Is it petering out the growth, or are we going to continue to see improvement? And that's actually what I'm worried about.
So, Sam, let's talk about what you're doing with that worry in mind. I know you're thinking about balancing what's working now with what you think can work down the road. Can you put some meat on those bones for us?
Absolutely. So I think we can all acknowledge technology, healthcare, right? Sexy sectors, lots of secular growth. We still need to hold them, of course, right? Especially in a world where I think growth is very scarce. There's a reason why many of those mega cap tech names can and probably should be commanding a premium. That being said, for lots of our clients, right, looking at portfolios, looking at balance, there's nothing wrong with taking a little bit of risk off the table. There's nothing wrong with taking a bit of profit, especially in some of those, named high flyers, right, where they've really run. And from there, we can kind of rebalance out maybe into industrials, financials, parts of sectors that we think are going to do well as this recovery broadens out.
What is it about the financials, Sam, that makes people push back so hard at the moment? When they look at this situation, the usual story. The reason they don't want to buy the banks, rates. The reason they worry about the politics, regulation. Sam, when you have this conversation with clients, what do they say back to you?
Well, they say exactly that, right? I think there's such a clear tie association with how financials do and interest rates. And to be fair, as a shortcut, as a behavioral bias, that does work, and it's worked in the past. But we're just trying to say, I think investing all around, given the landscape has gotten more complex, we have to have more nuance with how we analyze things, and we have to invest with more finesse. So for financials, I'm not going to write off that entire sector. Maybe I don't want community banks, right? Maybe I don't want regional banks, and that's fine. But I can look at big integrated financials. I could look at insurance, asset management, right? We've actually spoken about this before, but there's a lot of trends around higher savings rate for higher income people means more of a demand for asset and wealth management and insurance. So I think within every sector, we have to be more detail focused in terms of what we want to invest in given the trends, and not just write off complete sectors or buy in completely to sectors.
We need other people to buy in, and I wonder what changes the narrative around some of these names. Price can do that, but something has to lead to that higher price, Sam. What do you think that is?
I mean, that's a fantastic point, because if we just look at what even drove the market higher, right, since the lows, I mean, it's not earnings. I wouldn't even say it's sentiment. It's really just been valuation expansion and some dividends. But I think, catalysts that could drive the price higher a softer point, but, sentiment, we need people to feel better, right? And that's true of business leaders, but it's also true of individuals on the ground, right? There's a reason why we're all worried that if we don't get more stimulus, we're worried that retail sales, which we're doing a bit better, could decline, spending, if you see more missed rental payments, mortgage payments. So I think the overarching point I'm trying to make is the catalyst for prices to actually truly go higher, driven not just by valuations, is going to be we need to get COVID under control and we need to move through this, which, it's a simple point, but I think it's very fundamental to the outlook.
Probably the point. Sam, always great to catch up. Thank you. Samantha Razzarello there of JP Morgan Asset Management. In this market right now, through 3,500 on the S&P, we do advance by about 0.5%. On the NASDAQ, your outperformance in big tech up about 0.8%. At the market desk with more movers for you, here's Bloomberg's Scarlett Fu. Hey, Scarlett.
Hi, John. I'll start with a couple of transportation companies. Hertz is extending Friday's surge. There was a big block trade in Hertz, about 2.07 million shares traded at $2.61. Right now, Hertz trading just under that level. Remember, it lined up a new $1.6 billion financing package to help keep it going while it's in bankruptcy. If the loan gets approved by the judge, a group of first lien lenders, including Apollo, will provide that money at 7.25% above LIBOR. Let's take a look at Workhorse, which is currently down right now. The electric truck startup got New York State approval for electric delivery vehicle vouchers. The stock last week took a massive hit, down 15%, when the Postal Service delayed a decision on buying its mail trucks until year end. And a couple of analyst calls to update you on Brinker, the restaurant company formerly known as Chili's, trading under the ticker EAT, is down, even as BMO says its EPS could top $5 in a post-pandemic world. The consensus EPS right now is set to $2.14 next year, $3.93 in 2023. And United Rentals currently just a hair higher, even after it was cut to underperform at Barclays, with a price target that implied an 11% drop from Friday's close. The analysts there questions the valuation. The shares have gone up about 170% since March, and of course, it's been a big beneficiary over the past 3 weeks as investors increasingly price in a Biden victory, seeing infrastructure names as big beneficiaries. John?
Scarlett Fu, thank you. I've eaten at Chili's. For anyone that cares, I imagine nobody. 10 minutes into the session, equities up about 0.5%, the NASDAQ up 0.8%. Coming up on this program, global central banks could encounter challenges breaking up with their governments after partnering up to support their economies. A conversation you do not want to miss on this bond market with Steve Major of HSBC from London and New York. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
When opportunity knocks at the door, don't say, blimey, I've still got my pajamas on. Say yes to stuff and it will take you interesting places.
We're clearly going through some very unusual times and, enormous difficulties getting groups of people to agree on things
From Bloomberg's European headquarters in the City of London, join us on Leaders with Lacroix.
Minutes into the session, here are the scores on the S&P 500. We advanced 16 points. Just about through 3,500 briefly, dipped back lower again, up by 0.4%. Outperformance on the Nasdaq, up by 0.8% there. That's the price action. Ahead of us, another busy week for Fed Speak with Vice Chairman Richard Clarida discussing the economy today at 11:45 Eastern. Fed officials also debating tougher regulations to prevent excessive risk-taking, with Boston Fed President Eric Rosengren telling the Financial Times the following: if you want to follow a monetary policy that applies low interest rates for a long time, you want robust financial supervisory authority in order to restrict the amount of excessive risk-taking occurring at the same time. Otherwise, you're much more likely to get into a situation where the interest rates can be low for long, but be counterproductive. Bloomberg's international economics and policy correspondent Mike McKee joins us now for more. This FT article, Mike, coming out over the weekend, and everyone I saw tweeting it had a little bit of snark to add to it as well, because it's the Federal Reserve that's potentially causing these problems, and now they're talking about cleaning them up. Can you walk us through it, Mike?
Well, basically, John, there's a couple of problems out there, and we've talked about bubbles for a long time, and the fact that the Fed keeps putting liquidity into the economy and that keeps spurring buying in the financial markets is well known. They say they can control that through macroprudential efforts if it gets out of control, but they're not predicting that. The other thing going on in the markets is a concern about what happens to inflation if the Treasury Department keeps issuing debt at the rate they are. Take a look at what's happened in recent months. Now, the borrowing costs for the U.S. are extremely low, and you can see the white line there. The blue line is inflation, and you can see what happened to borrowing costs when inflation rose earlier in the decade, and that's what people are concerned about. We get a lot of liquidity in the markets, we get inflation, and the Fed raises rates, and then you see the borrowing costs for the U.S. go up, and it's a real problem. The other issue is you go back to 2013 when Ben Bernanke said, well, we might be ending QE, and you can see the spike in rates there just after August when that happened, the taper tantrum. Are investors going to be able to handle it once the Fed decides it's going to pull back a little bit, or is the Fed going to be forced to stay in the markets forever? Now, the other side of that argument is this. The Bank of Japan has been buying up its treasuries, JGBs, for decades, and their balance sheet keeps getting bigger and bigger, but look what happened to inflation. It just doesn't increase. And so the one experiment we have in these markets with the Bank of Japan shows nothing to fear. Do we fear the Fed? That's the market's question.
A question we'll keep asking, I imagine, for a long time. Michael McKee, thank you, sir. Investors fearing the Fed, that's for sure, could face strong resistance when eventually attempting to scale back emergency stimulus, forcing them back into action. HSBC Steve Major writes the following: the very long-run dovish economic outlook is far more important to bond valuations than the US election result or other headlines for that matter. The FOMC is following a strategy focused on an average inflation target, which will likely take years to evolve to a point where a tightening can be justified. Steve, I'm pleased to say, joins us now. Steve Major, fantastic to catch up with you, sir. 15 days ahead of this election, and for you to say that is not the big issue for this bond market. And a question I know that you are interested in, whether supply actually matters when you have people on Capitol Hill talking about $2 trillion of stimulus and maybe more.
Supply doesn't matter, Jonathan. I know that sounds outrageous. There are dealing rooms across the world where salespeople are explaining to their customers there's a new auction coming up. I know that the narrative can often be that when there's an auction or there's more supply, the yield moves up. But sometimes that can be a fallacy, that there's so much more that drives the rate of interest over time. And ultimately, it's the policy rate. And as Mike McKee was saying, it's about inflation. over the longer run. So I'm not saying nothing's going to happen, but if we look across the asset classes, there is one that can look right through the election and probably do nothing, and that's US Treasuries. That isn't the same for the dollar. It's not the same for some of the sectors in the equity and credit markets. It may not be the same for EM, but I think that the Treasuries are quite efficiently priced to look beyond. And this is not 2016, Jonathan, because then the Fed took the new information and they hiked. And they look back at that today with the AIT, the average inflation targeting, and they're basically saying those hikes in 2016-17 were a mistake. So that's not going to happen again.
So the extra yield down the longer end of the curve, Steve, should come from higher inflation expectations if you believe that keeping rates at zero for 10 years leads to higher inflation down the road. Are you doubting that?
Well, I am. It's interesting that when the very long-dated forwards get towards around 2%, there's some resistance. And to us, that's a buy signal. So the Fed's longer-run dot, from the dot plot, that last published in September was at 2.5. I doubt when they come to do it again in December, it will be any more than 2. And I think it's trending towards maybe 1.5. Now, in that case, if you can buy treasuries at some forward date that yields more than the policy rate, then presumably it's good value. I think that the idea that the steepness in the curve is due to supply is crazy, but if people want to think that, that's fine. Regarding inflation expectations, it seems to me that the experience in Japan and the Eurozone in the global economy in the last decade or so is pretty consistent, where we're seeing disinflation pressure. I think central banks might even be a bit confused because they're recognizing the structural forces that are keeping inflation down. And I think that the ideas like AIT, the average inflation targeting, at best they're aspirational. It's a wish. There's no explanation as to how the inflation goes up. And for me, looking at some chart from the 1970s with money supply and inflation just doesn't do it.
So, Steve, what I hear from you is that you don't think zero rates leads to higher inflation. So here's a question. You've got zero rates. We understand the reaction function. We understand we might have an experience similar to Japan and Europe. How do you price that policy rate through the curve, all the way out to 10s? Even maybe beyond. How do you think about doing that?
I heard one of the guests on a previous segment talking about Treasury yields of 1.25 or 1.5. How many times over the years have you seen people forecast higher Treasury yields? If you use a pure expectations hypothesis approach, that is, you discount the short rate back over time. So the Fed's telling you at the moment that they're on hold for 3 years. That's a pretty powerful thing. If you believe, like me, that they're going to struggle to get beyond 1.5 in 5 years' time from now, it's very difficult to see how Treasury yields can be above 1% because of the discounting. Now, people might want to add on other kinds of risk premia, but I think the jury is out on all of this. I mean, as far as I'm concerned, if the policy rate is staying low for a number of years, the Treasury yield cannot go up, and that's the key determinant. The key thing here is what will be the short rate in the coming years, and the Fed's telling us it isn't going up, and that's a very important input to the investment process.
Steve, another factor here is how self-limiting a potential sell-off in treasuries might actually be. It's something you've discussed many times over the years.
Yeah.
And I'm not sure how appreciated it is that every time we go into a crisis, we add more debt, and our tolerance for higher interest rates actually diminishes and continues to do so over time. How do you apply that kind of thinking to the moment we're in at the moment, Steve?
Well, that's about debt servicing costs. And the more debt there is, and I'm talking about total debt, not just government, also private sector, you apply that total debt to a blended rate of interest for the private sector and public sector, and you end up with a debt servicing cost as a percentage of GDP. And there are limits to how far that can go. And to me, there is very clear evidence that globally, as the debt has gone up, interest rates have gone down. Now, that's a pure association. There is no proof of causality. But looking into the fundamentals, it seems to me that we just can't afford this. So the more the burden of debt, the lower the rate has to go to make it sustainable. And I think people will understand that. That to me is a very, very simple point. Central banks and governments are in this together. They're one wallet, and we cannot afford higher rates.
Yeah.
It's as simple as that.
Steve, we've got 20 seconds left. Let's not waste it on the bond market. Just a final word, please, on your dear West Ham and what happened yesterday evening. What did happen yesterday evening? Where did that come from? You can throw it at Tom right now. Tell him what you think of Spurs.
Where's Tom Keane when we need him? The arrogance of Spurs, I think, was exposed, and it's amazing how true class shows through in the end. Happy to have a discussion with Tom. What a great game, though. Fantastic. I'm still smiling today, too.
I would love to get you back with Tom to talk about arrogance and exposing that. Steve, fantastic to catch up, sir. My best to you and the team. Steve Major there of HSBC. Coming up, the trading diary, the market-moving events you need to know. That'll be next on Bloomberg.
Is it your expectation to do this another 5, 10, 15 years?
It's like Whole Foods is my daughter, and I literally married my daughter off to the richest man in the world. I just kind of came along to make sure the marriage settled in well.
The second half will be a lot stronger than the first half in China. We're heading to what we call the golden season of auto sales.
We are very confident, we're going to have another big growth 2021 versus 2020.
We did not see people kind of holding back.
Chinese customers are into, right now, buying individual mobility.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
"25 minutes into the session, equities higher, up 0.4% on the S&P, up 0.6 on the Nasdaq. That's the story in the market. Here's your trading diary. Fed Vice Chairman Richard Clarida speaking this morning, 11:45 Eastern. President Trump delivering remarks in Arizona later this afternoon. U.S. housing starts on Tuesday. Results from Netflix after the closing bell, followed by Tesla on Wednesday. Plus the Fed releasing its beige book. Another round of jobless claims coming on Thursday. Friday, some PMIs in between that. Thursday evening, the main event, the last presidential debate from Nashville, Tennessee. From London and New York, that does it for us. Thank you for choosing Bloomberg. This was the countdown to the open. Catch me on Twitter at FarrowTV. This is Bloomberg.
around us, including the way we work and live, has been interrupted. Uninterrupted service is peace of mind. Juzi from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
Months after Hurricane Maria, Puerto Rico is still in peril. Huge swaths of the island are still without power, running water, or access to medical care. Experts estimate that it will take years before these services are restored island-wide. Much of the blame has been placed on FEMA for a slow response in comparison to recent disasters on the mainland. But recovery from a disaster of this complexity and scale has proven more challenging than anyone anticipated. And filling the gaps between an overextended public sector and a suffering populace falls on the private citizens. Robert Anderson is a Puerto Rico resident of 4 years.
The eye of the storm came in south of El Yunque, swept up towards San Juan, and out to Arecibo. Everything on the right-hand side is what we call the dirty side of the storm.
This isn't his first time in a disaster zone. With a military and telecom background, Anderson worked on repairing damaged cell phone towers in New Orleans after Hurricane Katrina. Some might be tempted to label him a disaster capitalist, seeking lucrative government contracts for his expertise. But as Anderson finds himself in the middle of a humanitarian crisis, he and his associates are developing a variety of pro bono recovery projects that target the island's hardest hit areas.
I see two Puerto Ricos. We're here in San Juan. They have telecommunications restored. They may or may not have power, but basic services are in place. They're able to get food. They're able to buy things. They're surviving. And when you look outside of the San Juan area, you can go 15 minutes from here and find areas that are devastated. I'm working on the devastated side.
Today, he's put together a boots-on-the-ground mission to provide medical care to some of the island's most isolated and vulnerable residents. Steve Berenbaum is one of Anderson's business associates. He offered an extra car and a set of hands.
So we received an initial report from a nurse that was out in the area. We're headed to the northeast region of Utuado for some people that are in need of urgent medical assistance.
Dr. Sally Priester is a physician from San Juan. She filled a van with medical supplies at her own expense and brought along a team of nurses. Google Maps estimated our first destination to be a 90-minute drive. But it didn't account for obstacles like this. Our first stop was the home of an 82-year-old blind Vietnam veteran. His roof was blown off by the storm, and he's been living alone in a back shed for nearly 2 months.
This cane actually got broken in the storm.